What up? First of all, fuck this gap. Second of all, you didn't miss shit on Friday. This market's been very shitty ever since we fell out of bed. I think it actually might be trading worse than when we were in that flag. I think we're trading worse here than we were here, or equally as bad. This market's just shit. And you already know how I hate gaps. I mean, I knew it was going to be a gap and go. I didn't take a trade. I woke up. Well, I woke up at about 8:20. By the time I got my coffee and sat down, we were like right here or here. I knew they were gonna take another push higher. I didn't take the trade because the 375s. I uh, I left. I locked in the bid at the time when I was looking at them. They were $1.34. Now they're $1.80. You can shove that up your ass. But I hate gaps. Absolutely hate gaps. Because you get this stupid shit. So, 10 goddamn points just thrown in the garbage. You know, they could have had a gap down, maybe a little fake out here, spike this 64, and then from there, ripped it. Ripped it through all this shit. Maybe came back, whatever, back tested it, and then for another leg. I mean, look at all this action we missed out on. Minimum 10 points we missed out on. This is why I hate gaps. Look at this bullshit. I mean, we could still even. I'm not saying we're selling off or we're filling the gap. I'm not saying that. But there's still the potential for a shakeout. Um, and this changes it now because I really thought for sure today or tomorrow we were gonna flush that 360. So this really changes the look of the chart here. I'm not saying this is it and we're going to rally and the bottom is in. But, I mean, who knows? It's anyone's guess. But, we'll see what happens now because that 360 will get cracked. It will get cracked. Now, is the bottom in for now and they come back? Who knows when? I don't think they're gonna come back later with the like end of summer or something. I don't know. But this changes everything. Man, you gotta stop doing that, man. A 372 for today. That was a total gamble. A total gamble. If it wasn't for this gap, you would have been screwed. You got lucky. There's no reason to do that. Because if it wasn't for the gap, you guaranteed to be down at least a little bit. So let's see. Into the close, you got it for let's say $1.25. So at the gap, you didn't double. Now, granted, it was a gap and go, but you just almost barely doubled, not even at the gap. Oh man. I'm not in a position to swing trade, but I maybe would have got like Friday's 375s. So this target here that I had, what was it, 64? 64.10 was this target I had. This line was here before this happened. This was from a flag over here on the first 380 run right here. And it just so happened right here to the penny. The first day it hit it, almost to the penny, off by 1 penny on that target. And then this little doji on Friday, but you know, I'm not in a position to swing trade, but stuff like this, I would have taken a swing. So I don't know if I would have did it Friday. Probably not. Just for losing the theta over the weekend. But you know, I probably would have taken like a 375 today if it wasn't for this gap. What's up, IT? Oh yeah, screw this stupid gap. It's going more. I already know it. This posture, it ain't done. Everyone's trying to fade this, whatever. I don't think they're gonna fill the gap here, but it's going. So if you want to go long, help yourself. Help yourself right here. 376 is gonna break probably 377. We're gonna hit this trend line here. So I ain't chasing it. You know, to make a whopping 30% on a 377 call or whatever. But yeah, we're definitely breaking out here. So here, let's look at it. Help yourself on that long. Help yourself. It is breaking 376, probably 377. I know how these days are here, but it's a bit of a gamble to chase it. And I hate these days. I hate them. I hate gaps like this. I hate them. I hate this action. This is just total garbage. Absolutely hate gaps like this. Big gaps. 7 points we missed out on because of this stupid gap. 6 points, 7, whatever, 7 points. I mean, this is just total bullshit. And man, the action we had since the gap down, it's total manipulation. Okay, so I mean, just look at the gaps. Okay, so all the selling, just okay, no buyers, gap it down, gap it down. Like you're telling me this is natural? That's bullshit. Now I think the bottom's very near and the bull market's not over. But this is how they do it here. They don't let you in. You know, whatever buyers there are, you know, however they manipulate this, they do. Just so the people that are buying are second guessing and all this stuff. And how I know this is because the action you see on these days, it's not normal. Okay? Like, you know, gap up and downs, even on regular stocks, they could have smaller ranges. And that's why I hate them, because you could have a monster gap down, and then you're, you know, on let's say whatever, let's just say Apple. Let's say it had a big like 10-point gap down, bringing it to 120 bucks or something. So huge 10-point gap, and then Apple all day is going to trade in like a 2-point range after gapping down 10 points. You know, you can have whatever levels you're at around that 120, whatever's close by. It's like you're telling me it can't move much off that gap down. So it's hard to explain, but like, you know, like right here. So we're busting through resistance here. Okay, this was the bullshit squeeze, right? And here, that's another thing too. It's like, are you gonna tell me these are natural market forces? Okay, so this was the bullshit squeeze here, where we were looking just for like a healthy pullback, and they never gave it. Okay, we weren't talking 50% retraces or coming back to 400 here on this hourly. Okay, you're gonna tell me this is all natural? Well, this wasn't natural. This is bullshit. How do you know? Because look where we're at. Remember how we were, you know, this bullshit squeeze? How I ended up making money here. Here, let's look at this. So this was the day I ended up making money into the close. They faded that, they ripped it, and then faded it, and we broke this low here. You guys probably remember that. This was on those, and this was the Friday. These were the squeezes. Okay, so these puts worked out here. This is where we got screwed with just the jam into the close. So this was a little bit more believable. But anyway, the point I'm just trying to say is like, you're gonna tell me these are natural market forces? Completely naturally, this worked out natural. There was no manipulation at all. Okay, you know, and this chop fest right here. You know, remember this squeeze? It was like 10 points to the upside with. This was a 10-point rip to the upside as if we were dumping. Remember that day? Okay. So, and then look where we're at now. So this was natural. You're going to tell me these were natural market forces here? And then just falling out of bed, the gapping, you know what I mean? Like, come on. There's no way. And how you know this was bullshit? Because of these 2 days that jammed us up here. So they propped up the market here. They threw the market up here. They tossed it up into the zone. And then whatever, you know, shenanigans going on here, getting people in and out, in and out, in and out, and then just pulling the rug and bam. And then now you got to chase this move. So what I'm getting at here is, remember before all this, actually before the bounce. So I started my room. I think I started my room somewhere here. Okay, this whole move down here, I was killing it on this slide down. I mean, this whole up until here. Okay, so I started my room I think in the middle of May. Okay, so up until when I started my room, all this here was action packed. Amazing price here. Let's get rid of this. Okay, all of this here was awesome, amazing action here. You know, things were working out how they should. You know, you had back tests, and you know, you had nice movement. You know, when we broke out, they came back. Like there was action all up in here, and up until this squeeze up, this sideways, and now this was some bullshit action right here. Okay, I mean, here wasn't that. I think this was better actually than this. Crazy as it may sound, it wasn't. There was some bullshit in here for sure. This was the biggest day right here. This was a bullshit day. They didn't let you in, all that. But the other days weren't great. But you know, you had some setups, okay. You know, and then we caught this move here. We were shorting. You know, this day I made money nicely on puts. I think I did. I think it was that day. I mean, this was the day for sure. You know, I missed the big move, but anyway, this whole move down. You know, I'm not going to get into detail like these days. I don't remember everything. But, you know, look at the moves down and up, down, up, down, up, down, and up. And then this bullshit, then just a rug pull down, not letting you in, no bounces really, no nothing here. And then, you know, now with the bullshit gap up here, you know, it's just adding to all this bullshit right here. You know, and that's why trading is so hard. Because here, nobody expected this. I didn't expect this at this rate. Just slicing through all this stuff, this big gap, big gap. I mean, look at this bullshit. I mean, come on. So if this was the support here, you're saying everyone was already in, everyone bought the dip, we're taking off here, and then here just everyone's scared, there's no more buyers, this big gap down under here. What is this, an 8-point range for this big move here? You're telling me this couldn't have a nice hammer capitulation? They very well could have scared the shit out of everyone. Flush 370, and it had a wicked bounce off here. Maybe some big. So let's say 370, and we came down to 365. Huge bounce to close the day as a hammer close to 380. Look how sick this day could have been. You could have had a 15-point bounce off those lows easily. And where would you end up? Still under here, but all this potential action they could have had here. And then they could have still had this. You could have still faded that hammer. Normally a hammer like that will get retraced. But, I mean, you got to be kidding me. There's no way these are natural market forces at play. And then look at the volume too here. This was pretty weak volume here, breaking out of this. If this was so serious, look at this abysmal volume. You're going to tell me, oh, the sellers are gone, and then there's no buyers. They could just slice through all this stuff here. Like, give me a break. So this makes sense this day. Under that pivot, that volume here. This was pretty good volume here on this day. But the move that kicked it off, below average volume, are you kidding me? And not only on that too, the way this Friday played out here, they were just dumping it into the close. There was no pullbacks. They didn't let you in. You're going to tell me more people weren't panicking here? Or even just piling on, getting excited because we're just dumping through everything on that volume? I mean, come on. Anyway, I mean, granted, if you got to stay short here. That's the only way you made money here. You had to stay short. You had to swing the short with these gaps. They weren't letting you in really, and you didn't get good opportunity. Intraday really, it was very minimal. Last week sucked. The Fed day was it all week, a whole week thrown in the garbage. You had your Fed day, you had pretty nice bounce from rally, and that was it. The other days sucked. So yeah, ever since, really, it's unfortunate because ever since I started streaming, the market kind of sucked. Starting off with this, rip here, look where we are now. And remember, this rip was on low volume here. They were saying like, oh, back to back, 80% or 90% days, whatever it was. Advancers, total bullshit. Okay, look where we are now. The volume was weak. So when people were saying that, look at the volume here. Below out, look at this, just weak volume here on this dead cat bounce. Weak volume. Again, I think, we're going to be putting a bottom soon, so, we could be back at 400 in no time. And then, you could debate, whether that was real buying or whatever, But, yeah. Up until the bottom, awesome action. Awesome. I mean, remember that Fed day? I got screwed because I literally pulled my bid on some calls that I had my bid at $1, and the low was 97 cents. I would have had an 11 bagger on that Fed day, so I was pissed on that day. I didn't catch anything that day after the Fed, so that did suck there. But you had so much action. Ever since we fell out of bed, well, we started rolling over here, and then here is where it just started sucking. I'm talking intraday. I'm not talking. I'm not talking. Well, I mean, for the swing, you had to swing these shorts here to get in. But the intraday action was garbage. A lot of shenanigans, like I said here, compared to prior. This was awesome. This was awesome right here. You could just look at the price action. Up, down, up, down, up. Like you have movement here. Here with the little gap down. They were shaking the tree here. You had some some movement here. Again, I don't remember these days, but what I do remember is I wasn't complaining. I was not complaining here like I am now. What I'm saying now about ever since here, this just kind of sucked. I was not complaining. I have no memory. The only memory I have is the Fed day that I pulled my bid, missing the low from by 3 cents on these 419s, 419s, or I think 418s maybe here. So I remember that sucking, but I was killing it. I was killing it, long and short. This whole move down here. So we'll see what happens here. You know, they're probably not going to break low day today. They're maybe they even push 380. I don't know. I didn't look at the charts yet. I didn't even look at ES or SPY or 4 hour. I didn't look at the charts yet. So I don't have an opinion yet about what's going to happen today. But based on the posture here, it's very unlikely they're just going to tomorrow, jam it up higher. I think tomorrow, I don't know about an inside day, but I think tomorrow we crack 370. Tomorrow or Wednesday. I don't know. Right now I can't say how it's going to play out here. This throws a wrench into the setup here because coming out of here it's tricky, because coming out of here, I think we're not coming back once we get above 390. We're not coming back based on the posture, because this right here, plus the weekly. Here's another thing too. The weekly is very, very ugly. However, once we start bouncing, like this is a deep cut. I was looking at this. Okay, you could look back as far as you want. This MACD cut is ridiculous. Okay, this is a weekly. What's the reading? -16. Okay, Convid didn't even hit that low. Or I'm sorry, that's the crash. Well, obviously, here's Convid. Okay, the '08 crash didn't hit that low. So it works two ways. This wasn't one move here. Okay, now normally when you get this deep on a MACD rotation, that's the end of it. Meaning you're not going to get a double dip like this. You could get this divergence here. This is what might happen here. But I don't know about that, given the current, for other reasons. But I don't know that we're going to get that. So if we bounce and then take out the pivot right here, 365 or whatever, I don't know if we're going to get this. So this week is going to be very interesting, because we may get some crazy capitulation. It's very possible we get some intraday bad news, like, we're talking possibly we could have like a 20-point swing in one day. That's very possible. So 20 points. So just imagine tomorrow, let's say tomorrow they gap it down a little bit, under 375. Let's just say 375. Okay. Because I thought my target was at a minimum breaking 360, and a good shot at 355. And my number I had, I think, was like 354. My number was 354. I didn't think they were going to hit 350. Everyone's looking for 350, and the chart doesn't need 350. To satisfy the chart for SPY, right here, this 350, 350, 354, would satisfy the chart on SPY. You got this gap. Did they fill the gap here? No, they came short. So, there's your 350. And the gap, I guess if you want to say they fill the gap at 350.16 and then never hit 350, and that's where they screw everyone as we're capitulating. Whatever. That could happen. 350 could get hit, okay, but in my opinion, doesn't. But you could satisfy the chart with that 360 break coming here, but I think they go deeper if they do, and then we hit that 354. That would satisfy this weekly chart. I forgot what the retrace is here. All right, so yeah, they would come short of the 50% retrace. Retraces aren't exact, so if they came to 350, 5350, 54, that'd be good enough for a 50% retrace. The chart would be satisfied. That would be big capitulation, big reset on the overall market. Nasdaq we're already deep into this area here. The Russell too. So everything would be complete if they came back there. So if they don't do it here, because they didn't even hit that pivot. Let's just call it 359. They didn't crack 360. And because of this, the damage we had, they could even do it next week. But I don't see that happening. This chart needs to. I didn't even notice that. Here's a trend line from these pivots here. That's interesting. Let's see what that looks like. What is this number? 351. There it is right there. You see how that works out? Look at this. Rejected, 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 rejected. And then you like how this works out too? Look at this bullshit too. So clearly this is important. After the market essentially crashing, they just so happen to respect the trend line from 2 days of pivots from that 350 zone. So clearly this means something. Rejected, and then here now we get this gap. So at a minimum we're coming back here likely this week to backtest that. Actually, I should make this very big here, because this is going to be a good line in the sand here to see how the market. So meaning if we come back, once they retake this again, that's going to be a good signal that all right, we're done going down. The rally to 4.25 is commencing. Oh yeah, so who knows how this is going to play out here. But yeah, okay, back to this MACD. So I showed you on the weekly how on the weekly they could bounce it, and then I don't think that's going to happen though. That would be very, very ugly. That would be, man, that would be, if they're going to do that on the weekly, we're going to bounce, maybe get rejected at 390,400 and then take another leg down on that weekly. That type of action is the bull market's overaction. So I don't think that's going to happen on the weekly that way. But with this stupid gap up now how are they going to do this? I don't know. Because on the daily, I think once we make this cross, we're done going down. But right now, this posture here leaves it open for some big intraday moves. Now, technically, if you ask me, I think there's an 80% chance, you know, this is going to continue and kick off the attempt to, you know, bounce, fix the chart, all that stuff. Technically, we could still maybe just kind of flag out and then take another leg down, you know, leaving this still open, going lower. I don't think that's going to happen though. So technically, you know, bringing up the Stochh here, and then as we take the next leg down, the Stochh will roll over, and then we get the bullish divergence on the Stochh, and this could still stay opened up. But it's not in the best posture for that to play out. So we'll see how this chart evolves here. And normally too, when you get a cross like this on the MAs, normally you're not going to just get this cross and then just turn up. Normally this is going to take more time. You know, I've seen this a lot of times, even just on a 5-minute. You know, if this was a pretend there's, you know, this was a 5-minute, and you're trying to play the bounce. You know, you get this bounce here, and then they break the low day, they break lows here on this cross. Normally, now granted this is a big distance, but just pretend we're a little closer on the 5-minute. Normally on taking the next leg on this cross, you know, it's not like, oh, they break low day and then that's like a shakeout and then they rip it back up. That normally doesn't happen on a cross with the 9 and the 20 like that. Oh man. This is interesting too. This look here is telling me there's a possibility they could kind of fall out of bed here. I'm not saying right here, but this posture is telling me that we have a chance. They're not done yet. This 20 kind of hockey sticking like this. We'll see where this plays out here. You know, here's the 15-minute. The 15-minute took a big blow here. Look at that. You like that? You guys see that? You like that back test? So I'm going to wait for this chart to settle in here. Right now, I don't know if... it depends. Man, we could get a pretty good pullback. I don't think it happens just yet. Because this 20... That's not quite the look you want to see here for, you know, a good move. But, you know, look at this 200. So it's too early to tell. I didn't look at all the charts yet here, but if we could come back, you know, under 374, meaning the high days in for now, you know, however they get there. then I may be looking for some 375s for a break of high day. That's possible. Again, I'm going in this blind here. I didn't look at all the charts. That's where it kicked off into the close. That's my speech on not getting greedy on the day that was the easiest day to be greedy on the sell. I give the speech on not being greedy. Oh man, I mean it was true. And see how the market is. If you guys remember this day here, my speech, and then I missed another like 5 points into the close, and I was talking about wanting to get the 400s, depending how we close, to swing them, and because of this, it just I didn't want to chase it, and I sold so early. That's why I didn't get in. I wouldn't have bought the Mondays here. I would have bought the Fridays. Level's not working at all today. Exactly, that's what I'm talking about. The market's broken. It's not working like it normally does. See, that's why trading's so hard. So this could be anybody. It could be a professional, a quote unquote professional, whatever. Someone, let's just say someone that makes consistently makes at least $1,000 a day. Okay, so a legit trader. Okay, so well, let's just take today as an example. So well, really, the best day would have been that day in that flag that they crashed to the upside 10 points. This is back around 4:15. It's by 4:15. But anyway, so look, on a day like that, just pretend this is the day. Okay, well here, let's look at it like this. So this is why trading is extremely difficult. And what Vlad just said is, my levels are not working at all today. Okay, and that's why trading is so difficult, because there's no guarantees. So the 80-20 rule, 80% of the time everything works. Okay, so this big gap. Okay, well here you go. Here's the level, 374 here. Okay, this is a lot of action here. Remember the gap below this here. So now with the gap, you got people that may have bought this. Yeah, people stuck here. Look how they just went right through it with relative ease. A 2-candle, 3-candle consolidation from this entire day. This bullshit. This was the Tuesday before the Fed. Okay, so you had a whole day of action here. You have big volume here on the Fed on this dip here. Okay, and it only took 3 candles to pause, and then they just go through it, and they're just grinding, not looking back, grinding through all this stuff here. Okay, like, are you gonna tell me that's normal? And then some days, remember backtest Friday, and then on some days they can't even get away from a number without coming back to it 50 times. I mean, are you kidding me? Is that natural? Is that real? I don't think it is. Again, this is not me saying, oh, the market's rigged. You can't make money. That's not what I'm saying. I'm just analyzing the price action of what is quote unquote real and what isn't. Anyway, back to what I was saying. So this isn't the best example, but a trader, whatever, it's not a bad example. So right here, let's say they start building the position here. Okay, and then it's 375. They add against 375. Okay, and then you have this 376 pivot right here. So here's a good pivot. 376 is pretty good right here. Okay, um, and let's just say hypothetically they never come back to, let's just say 375 and then even 374, which right 80% of the time 374s they're going to hit it today. But let's just say they keep grinding and grinding and no real pullbacks. They don't come back to levels they should be coming back. And then someone just keeps building and building and building that position, with intraday leverage. Not a position where, okay, well, I can hold it for a few days. They're building a day trade position, and it never comes back. I mean, there's no guarantees, and they keep building and building and building a position, and they could essentially get wiped out in one day. Trading the market, building that position, which at least 80%, probably 90% of the time, if they're building that position, and let's say that it hits 378, and they're out of buying power, and they just need it to come back to 376 to break even or make a little profit, and then that doesn't happen. Okay, so that's why trading is extremely hard, and that could, any trader in the world can be affected by that, because that's not normal behavior, and you can get caught up in that, adding to it or staying in the position, whether you're adding or not. But and then when we're down here, you get to look back in the chart on the 2021 grind up levels you have and all that stuff there. But we essentially just melted up in 2021. So these levels are short-lived, because the chart didn't consolidate in 2021. Whatever levels you have going on here, they still apply, but yeah, one thing I wanted to say on Friday, I forgot. I wanted to have a speech, but Vlad wasn't here. I was waiting for him to talk about it. But and this is very difficult, very, 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 for every trader in the whole world, is waiting for A plus setups. So my problem is, I have two problems. Number one, I'm trying to make a minimum on each trade. So what I'm trying to say is, I go, because I can't day trade, I can't scalp. So I go into every trade, um, looking at a minimum a double. Given these market conditions, a minimum a three bagger, but they haven't been giving me shit. But in general, at a minimum, I'm looking to double my money. Every trade doesn't have to be a five bagger or whatever. That doesn't happen that often. But there's on any given day, there's always a double on any given day. Usually relatively easy, a double on some dailies. Okay, but my problem is, because I'm looking for that, I miss other trades, and then also too, on a day that doesn't give you much action, it's so difficult to sit on your hands, and then maybe you never get a setup. That's extremely difficult, because you'll see some kind of setup, and maybe you've been sitting all day. Maybe you're sitting all day looking for the move, and then a setup evolves, but it's not a good setup, and then you get in there expecting a decent move, and then let's say it only gives you 50% on the move. When you're looking at least for a double, you've been sitting all day, the market hasn't really done much. That's what makes it difficult, at least for me, because I sat all day. I was green on the trade, up 50%, but I'm looking for more, and that's what's difficult. I'm For the average person in general, I am greedy. To me, I'm not greedy, meaning, I'm not looking for in general. If you were to talk to anybody, the average person, looking for a minimum 100% on every trade, that's they're going to say that's greedy. Okay, because especially, let's say, well, I'd probably say most people are trading weeklies, but let's say for a semi-conservative trade, today you'd be trading next week's, let's say next Friday's 375 calls at any point today. That's what you'd be looking at. Okay, that would be definitely much more conservative. So next Friday's 375 calls, catching a double, that's a home run for next Friday's 375 calls today. You'd have to catch probably a 5-point move to double. So, trading quote unquote conservatively 2 weeks out on some at the money or in the money calls, to get a double on that, you need a big move. Okay, so for that trader who's trading that far out, double, they're jumping up and down if they get a 100% move intraday because they're trading 2 weeks out. But for me, trading today's options or Wednesday or whatever, you could easily catch that 100%, 50%. So the person who's trading 2 weeks out 50%, that's a sick move for them. They got to catch probably 2-3 points in SPY to be lucky to make 50%. So if I'm making 50% easily on a trade that I was looking for a double, but I only was up 50%, I really have to learn to lock in those profits because every setup's not the same. So, you need multiple time frames in your favor. So, for example, playing a bounce. Right now, we could bounce, we could hold all that stuff, but we're still in the bear market. So you don't have the weekly, you don't have the daily, or any of the time frames in your favor. Here's the 4 hour. The 4 hour is not even crossed, so that's not in your favor. Now it doesn't mean this can't give you some sick moves in process of crossing. Okay, you could catch the sick moves, but what I'm saying is you don't have bigger time frames in your favor that support that say the chart can sustain a bigger move. Okay. So like right now the hourly's crossed, and maybe we pull back to 373, 372, and then rip from there. That's very well possible, and then rip to 380, very possible. But playing by the book, yeah, right now if you're a bear, you're cross. This is a bullish cross if you're bearish. But at the same time, as a bull, you're below the zero line. This is way different than if you were above the zero line. Meaning, let's say we're above the zero line with this same posture here. All things being equal, relatively, the MAs are ugly. But just take the MACD by itself. If we're above the zero line with this flag we're in right here, that would be strongly, okay, let me just repeat one more time. Without analyzing the MAs and all this, the gap, all that, okay, just pretend this was shifted up with this current posture. This current posture right here, if this was shifted up, would be screaming buy the dip. So right now on this candle, I would be looking for any dips. Well, not any, at a minimum below 374. I'd be gobbling that dip up. Again, all things being equal, the MAs aren't supportive of, buy this candle on the hourly and the next one blasts off. But just looking at the MACD, if this was shifted above the zero line, and let's say the MAs were more supportive in place, this would be a screaming buy the dip, bull flag on the hourly, and this momentum above the zero line will sustain it's a extremely high probability if this was shifted up that buying the dip is gonna pay. It's gonna hold. Very, very high probability. I would say probably 90% probability. What I just described, if this was shifted up. So what I'm trying to get at is, when I'm in that trade, if I don't have that ideal setup, you can't stay in the trade. You can't be in the trade. I don't even want to say assuming, but at the bare minimum, you can't be hoping that the trade is gonna shape up to, give you your minimum 100%, maybe a three bagger on your trade when you don't have that ideal setup. So it kind of boils down to patience. Patience, you could essentially sum it up as patience, but I'm patient looking for the trade, but you could sum it up as patience, meaning patience in the sense that you have to only take a 50% return on your trade. Take that 50%, sell it, because odds are you're not going to get much more with that setup. And the patience comes in. You're going to have to be patient for the next trade that might give you your three bagger or possibly a five bagger. Hold on. Let me get. I've been talking a lot. Let me address a couple of things. Yeah, I'm for real. You got to be careful with that. I can only swing for now, so we'll see. So again, you said you're new, so you got to be careful. Just believe me, take my advice, because I'm in your same shoes. I can't. I'm under PDT too, so I've lived it. I'm currently living it. So when I tell you about certain things, you got lucky on this gap up on that call over the weekend. If you would have bought Friday's calls, I wouldn't have said a thing. But buying today's calls, that was a straight gamble over the weekend, regardless. Because you didn't know the market was going to gap up. Okay? You did not know that. Nobody knew this. Even a gap above 370, let alone this gap. Okay? You didn't know that. Nobody knew that. So buying today's calls was a pure gamble. Unless maybe you were buying in the money calls. So if you bought 365 calls for today, Friday, I would have been like, okay, that's not that bad. Still a gamble because they could have just opened flat, and then you could have bought them at a discount today. But anyway, and then back what Vlad said, addressing my big talk earlier, even my monthly, weekly, and daily levels are not working. Okay? So, exactly, here's another trader who's supporting my analysis about the market being completely manipulated since we fell out of bed. And how the market's broken, it's not trading how it should. Because here's another trader saying monthly, weekly, and daily levels are not working. That's what I'm talking about here. Let's just look at the daily, what I said here, with 374 here. 3 candles and then just right through it and just grinding through all this stuff here. Fed day, heavy volume here. Okay? Now, granted, this could be the high day and then we could pull back some more and that was all the energy the bulls had. But the way this is trading, like, you got to be kidding me, just to be just grinding through all this stuff here, like it's not there, just hanging out here. I'm not saying this needs to crash, but you get my point, okay? Of how the market's not trading how it should. It's broken. It's just not. Okay, I'm not going to repeat myself. You heard my big talk before that. How before the bounce from 380, prior to that 380 initial pivot low, the market was great, no problems, okay? And then ever since they had that squeeze into that flag around 415, it's been bullshit since. Okay, so that's addressed. Yeah, that's your goal. That's not greed. It is greed in a sense, and I just explained that a few minutes ago. Meaning, I have to be more careful. So if the chart, I've been meaning to do this. I haven't done this. Just I don't want to say it's laziness, but I say I'm gonna do it. I never do it. I gotta just start taking notes, and I wanted to make a scoring system. So this is gonna address TUA here. So I want to make a scoring system. Two things I haven't done: make a scoring system for my setups that I could analyze and make a log of them. And then what he's saying with the back testing, I'm probably, you know, I forgot what the number is, but without even knowing the numbers, I know for sure I'm 70% accurate in my calls, just overall. Okay, and I think 70% or like, as far as like, and again, this is not bragging here, but I think it's 70%, maybe mid to high 70s is like top trader uh, win rate. Well, I guess you could call it win rate because it's one thing to be correct about a setup, but then it's another thing to take the trade and then stay in the trade, not be shaken out and be profitable on the trade. But I know for a fact that I'm definitely 70% accurate, which you don't even have to be 50% accurate to be profitable as a trader. So that goes into, well, what the hell are you doing? Okay, well, I just explained what I'm doing. Okay, and why I'm messing up. Because what TUA said is locking on 50% each time. What TUA just said there is exactly what I was talking about. You know, God forbid you only make 50% on a trade that you were in for, maybe 30 minutes. Sometimes even 5 minutes, 10 minutes. God forbid you only make 50%, right? See, but again, that's trading too, because you're not going to win all the time. So, that three bagger could make up for like 5 trades. So, you're not going to be making a three bagger on every trade. And that's why trading is hard. Oh yeah, I don't trade Zella. There's another one I forgot. I've seen it years ago, but there's a journal you got to pay. It's like a really good one. You just input all your data, you get statistics for everything, and it's worth its weight in gold. You want to see those numbers because it shows you. If you don't have those statistics, then you're just kind of like, yeah, TraderView. I think that's it, TraderView. I think you got to pay monthly subscription, But if you don't have numbers to go by, you're kind of trading blindly because you can't see what's working and what isn't. Those numbers right there. It's the cold hard truth right in front of your face. So that it's extremely valuable. Yeah, I remember looking at it years ago. I think there was a monthly fee, and I didn't have the money to pay for that. Maybe I could I'll set up the GoFundMe so you guys could we could find out my numbers, my real numbers. But I think I don't know, but TraderView sounds like it's it. Like very good software. Um, that you put in every trade and it gives you every statistics, your just your win rate, your P&L, what time, like it tells you everything. It's very valuable, and I will have it one day. I mean, right now I definitely can't afford it. Yeah, the Excel, but you gotta get the formulas for that. You gotta make it yourself. I mean that's a lot of work, and but yeah, you obviously could do that. But yeah. So finishing off what TUA said there, um, you know, here let me show you guys something. Okay, so this is a pretty good pullback here. So this is looking good here. I'm not saying I'm getting here. We're still very extended. I don't think the market has the posture to support the super extended, and we're just going to hold it. Look, because that daily, look at the 200, the 100. Again. So here we go with the amount you trade. You don't need paid version. Okay, I don't know, Jay. I'll have to look up to it. So let me Google TraderView right now, so I have it in my on my tab, and I'll see, because there was one that was the journal to get. Like, it had everything. It was just the best one. It was been years since I looked into it, but okay. So here, how I was saying about waiting for the best setup. So right now there could be a setup. Right now just looking at this here, there's no setup. Not a good setup. Okay, so maybe this is dip. They bounce it up. They come back lower. This is not a good setup here. There's no setup right here, just based on the MAs. There's no setup just based on the MAs. There's nothing jumping off the chart here where I'm going to catch at least 2 points. At least 2 points. But, what was I going to say? Kind of lost my train of thought there, but, oh, yeah. This is what I want to show you. Okay. I wanted to show you guys this, like maybe a week ago, maybe 2 weeks ago. Okay. This is a very powerful, um, a very powerful, I guess you could say, thought process. I don't know what to call it, but it's a very powerful, thing to put in your mind as far as what it takes to be profitable or successful. So let's look at this. Okay. So let's look at this. Okay, I've been doing this for a while here. Okay, I've been doing this for a while. There was a video actually last week. I wanted to have a talk about it. There's a video of a guy I'm subscribed to. I haven't watched in a long time actually, but he had a good video addressing what I'm about to show you. And here's what's very powerful. Okay, so just to this, I use this for me, and the reason I started doing this is to help me be more patient as a trader. It really boils down to patience, because I'm right. Okay, let's just say I'm a 70% trader. Okay, I wouldn't be. If you had asked me, I'd probably say 70%. Okay, right, 70% of the time overall. You have streaks here and there, but overall I would say 70%. And here's the thing too, because I'm looking for at least a double. So the trades that end up being losses, I was profitable on that trade. And this is why I look at this. Because those trades that end up being losers were profitable. They were profitable trades that turn into losers because, God forbid you only make 50% on the trade, right? Or 30% on the trade. God forbid on a $100 trade, 30, you make $30, but that's where the impatience comes in, because I'm not looking for a 3-bagger on every trade or to double my count every day. I'd like to do that, but I'm not going into the trade thinking that. But the problem is you get caught up, because when you're quote unquote only up 30% or 50% on the trade, and it looks like there's potential, but at the same time the chart's not the best setup. When you see it get a little shaky, you need to take that 30% gain and lose that buying power for the day. That's just what you have to do. Because why are you gonna put a $100 trade on, be up $30, and then turn it into being down $30. I mean, that's just ridiculous. So okay, so look here. Okay, let's just use $500. Okay, so this applies to everybody here because anybody can make an account, a second account, and you could try this out here. Okay, $500. Let's look at the numbers here. Okay, 20 trading days in a month. Let's play with the numbers. We're going to start with 10%. Okay, so if you had $500 in your account, okay, hypothetically here, okay, because you're not going to win every day, but it's the thought exercise that this is trying to show you. So if you made a new account and you did the $500 account challenge, in 1 month, if you could average 10% a day with $500 in 1 month, you'd have over $3,000 in 1 month with $500 bucks. Okay, so 10%. So now, well, obviously you could go all in on every trade, but that's going to be silly. So you don't have to do that. So let's say with the $500 account, let's just say you split it up into 3 trades a day to try to get your 10% a day. $500 account, you just have to make 50 bucks a day. Well, more than that, but with 550 bucks, you got your goal. Okay, so you could do a $100 trade. Okay, a $100 trade, 1/5 of the count on one trade. Let's say you only make 20%. Okay, let's make it easy, 25%. So you need one more trade. You have $400 left out of your $500, and one more trade to make 25 bucks. Okay, that's not difficult at all. This is why I did this, because when I use the 10% number, when I would do this in the past, I'm like, I know for a fact I can make 10% a day. Like, I'm like, oh, that's easy. And what do? I just fall back in my old ways. Let's just say, it's the power of compound interest. So after 1 month, you're here, okay? And here's why I'm impatient, because I'm trying my damn hardest to be able to quit my slave job. Okay, just to quit my slave job. I'm not looking to get rich here. I just want to quit my slave job and just do this and have that free time. Even if that only means 50 grand a year, I don't care. I would love 50 grand a year trading to have that freedom. The freedom alone is it's priceless. Okay, so here we go. With $500 in 1 month, you're at 33. Now here's where it gets crazy. In 2 months, okay, this is where it gets really crazier. In 2 months, so in 1 month, 10% a day. So today, imagine you have 500 bucks. You only have to make 50 bucks today. You met your goal, and you'll be at the rate to get you $3,300 at the end of the month, starting with 5. In 2 months, okay, because again, compound interest, the bigger it gets, the more exponential it gets. 1 month, you're at 3,300 from 5. In 2 months, you're at 22 grand. In 2 months, making 10% a day. Okay, assuming you make 10% every day, that's assuming no losses, but at the same time, that's going by 10%. So maybe on one day, maybe on that you have a crazy day, you make 50%, maybe you double, because we're starting with 500 here. So if you have 500, you're not going to care as much with 500. So maybe you see an awesome setup, this week, there's going to be a sick bounce. I mean, we already bounced, but let's say, they pull the rug, and off that rug pull, we get a sick 10-point minimum bounce in SPY. Okay. Oh yeah, Jay Victor. Yeah, you know what? I almost did the same thing. I turned, I'm not even kidding you, I turned $80 in my futures account, my Tradeovate account. This was last year. I blew it up, and it was under $100. I kid you not. And you have your margins. You need like $50 margin for one contract. And I kid you not, I think I turned $80, so it was under $100. I was just like skating on thin ice. I turned that $80 into, I want to say it was $3 grand in 2 days. Yeah, it was under $100. It was, I think it was like $80, if I remember. It was $80 into $3 grand in less than 2 days because I think it started on a Sunday, so I was trading the future Sunday night up until Monday night. No, I think it was a day, like a day. If you want to include, because futures are traded around the clock, it was $80 into $3 grand in less than 48 hours. Okay, and that's trading. That's scalping. That's not. I got lucky. The market dumped 100 handles in an hour, and I caught that. It wasn't that. That was trading my way from 80 to $3 grand in less than 2 days. Okay. Since we're on the topic, the best I ever did was last year, and I thought that was it. Last year, I'm gonna make it. I really thought I was gonna make it. Okay. Last year, I turned 200. Yeah, 200. It was like 190. Okay, just 200. Last year, I turned 200 into. It peaked at 7,500. Okay, so I literally started with $200, not $200 of the account. The account had $200 in there. I turned $200. On the closing basis, I closed at like $5 grand or 5,500 on a closing basis, closing the day at $5 grand or 5,500. But the next day after that $5,000 close, it peaked at about $7,500, and that was in less than 2 weeks. This happened. $200 into $7,500 in less than 2 weeks. And it started out with CGC. And this is when CGC, that's not when CGC was running. This was when it was already bleeding off that all-time high. I caught a nice gap, traded it again. I jumped into space. I caught a nice gap in space. Let me show you where that was. It was very sick. So this is where I caught that move I just described to you. We got to go back more because it was over a year ago, right here. So as crazy as it may sound, there's this gap up right here. Okay, so it wasn't this. It wasn't like bang 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 10 bagger. It was right here. I was in the 23s here at the close. So this was luck that they gapped it up. They gapped it up here. I got lucky, but on the hourly and the 4 hour, it was looking good. Okay, so that's why I held. And this was going into, I think this was a Tuesday. Okay, so I caught this. Here's the crazy part. Sold it pretty much at the high that day. Then, I believe then, I don't remember correctly. I may have bought, I think I bought the dip here again, held it, sold the gap. Either that or I bought the dip here and held a little bit, and then at the open here, I bought. It's funny enough. I went to a funeral on this day. I was at a funeral. I bought at the open. The chart was looking really good. I went pretty heavy in here, and I went to the funeral with my positions open. I was that confident, and it worked out. I put my sell orders in. Oh my god, it was so sick because I had levels and all that stuff, and I approximated where the calls would be, and I sold like. I think before I left for the funeral, I sold like half the position and held the other half, and I had my sell orders, and I think I sold half of the remaining half. They hit my sells like amazingly, Like we're talking, I was like 10% off high day on these calls. Like it was so sick. And then the last quarter position, I was holding closer to power hour, and I called on my phone. I called Tasty Works to change my sell order, and then I got out amazingly still at not at high day or anything, but anyway. And then there's space. I caught a sick gap up the same week on space. It was wait, where was it? Oh, Jesus. It was freaking this sick move. Oh my god. Yeah, here it was. Jesus Christ. So this, okay, first of all, I didn't catch this move. But yeah, I did well, yeah, I wasn't smiling, but yeah, it definitely did feel good. Because not only because of the sick trade, but because my count where it was, I was like, oh my god, this is it. I'm gonna make it here. This is it. It's only up from here. But so first of all, look at this sick move. I mean, this is just sick. Okay. So the same thing here. Here's my trend line. It's just there's the proof right there. Okay, this kind of falling wedge. I held it right here. I caught this sick gap up here. I think it was a 7-bagger if I remember correctly. Caught a 7-bagger here on this gap. So yeah, check it out. So I sold that. Okay, so this was I think CGC gapped up here, and then when I sold here, I rolled it in the space. I think it was literally from one day to the next. So I'm pretty sure CGC gapped here. I sold. I rolled over into here and caught another gap. Like, I mean, because you got to think, how are you going to turn 200 into 7,500 in 2 weeks? Like, you need some big multipliers here. So that's how it's just like back to back, bang, 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 like so sick. Then this day, so without knowing what happened, coming from 16 to 22, nobody wants to hold, but I'm like, no, no, no. The move ain't over yet. It wasn't just because of the momentum still holding, but I knew, the hourly, 4 hour, all that other stuff, plus this kind of falling wedge target, I knew this move wasn't over. I held this day too. I think it was the 22s, and I think I made a 3-bagger. I sold it at the open. I mean, look at that sick gap from 21 to 25. Okay, so I caught that, and then the final one on space, I think it was an intraday trade here, a day trade. I think it was this day here. I caught a double. After us this big move here, and then this big continuation squeeze. I think I caught a double on this day. Anyway, but that's how it happened. Completely killed it. Just killed it. And funny enough here, I was looking to swing some calls here, but I just didn't, just because they were so juiced up. I mean, look how sick that was, Jesus. So I didn't catch any of this here, but I wanted to, but because the calls were so juiced up, I'm like, nah, I'm not gonna hold it. I'll catch an intraday move or whatever, and they didn't give it to you. It was stupid gap and go. So yeah, anyway, literally 200 into 7,500 in let's just say 2 weeks. I think it was less than 2 weeks, but it was close to 2 weeks. And that was multiple trades. Multiple trades I got there. Man, I remember just killing it, man. The setups were there, and boy, did they work out. I mean, oh man, that was a lot of fun. But yeah, so that's why I'm not even worried right now about missing whatever's going on here. So now the way it's looking is it's looking better for a continuation, but right now there's no setup here because these MAs are garbage. Okay, I didn't even fully look at all the charts yet. There's no reason to hop in here because they're probably not going to collapse, and we ain't going anywhere to the upside yet either. So on this next hourly candle, I would start to think about going long. But man, just this look here, we might not get anything till power hour, like a real move. So I'm not rushing anything. Okay, going back to what I was talking about here. Um, the power of compound interest. So the reason I started doing this is because when I played with this 10% number, I started doing this. I don't know. I might have started doing this years ago when I first well just I think I originally did it with like how many 10 doubles will make you a millionaire, that type of thing. And I was just it all started with the idea that I know for a fact every year the market will at least, at a minimum, give you, you know, let's just say like 3 to 5 quote unquote guaranteed trades. Okay. That looking for those prime time setups, the market will give you at least 3 to 5 quote unquote guaranteed, like 95% or better probability trades that you get in, even going a month out on some options. Okay, so not only is the setup prime time, but you're not gambling on some dailies, trying to catch a 10 bagger. You could go a month out with some somewhat out of the money calls or puts, and at a minimum you're gonna double at a minimum. Like, this is being conservative. So let me give you a setup that just happened not long ago. That was one of those setups, but because I don't swing, I didn't take it. It was right here. This setup right here. This is one of those setups that I just described right now. Was this setup right here? Right here. This is the all-in. There's a 99% probability this trade is going to work out. An all-in kind of trade here. Being conservative. Let's say going a month out on calls. Okay. So why? 2 bullish divergences after a big move. Okay, this is textbook what I'm describing here of my hypothetical. 2 divergences, 2 bullish divergences after a big sell-off. Now, you could go to the hourly without looking at the hourly, only looking at the daily. You could have began. So here is your confirmation. We close above the 9, and we're starting to get our crosses here. So after this close, I would be looking to enter the trade. Without trying to sniper the trade or whatever. It wouldn't matter. You could have bought it at the close. You could have bought it at this close right here. Anytime on these 2 days, I would be looking to get in the trade for a swing. Okay, so right here, let's show you right here what it would have been. Okay, so because I don't have the chart from June's monthly calls, we'll go to July. So let's say here, being conservative, on the 24th or the 25th, you bought July 400s on either of these days. Okay, so let's look at what it would have been. Okay, so let's see. So what days were those? Those were the 24th or the 25th, July 400s. Okay. Alright, here we go. I think it's the 15th. Yeah, it is the 15th. Okay. So the 400s. Here's an example of what I was talking about here. Okay. So the 24th or the 25th at the close. Let's just say the 24th here, because you had this day here. Okay, now this was the close above the daily 9 on this day right here. So you'd be looking the next couple days to buy. So the gap down, let's say you're all excited. Okay, $10. You got them for $10, right? You know you'd be buying them for $10. After liking them here at $13 on that close, and then you could get them at 10. And the trade idea is a swing trade here. So this is over a month and a half out. So you're gonna, you'd be buying these at $10. Now, obviously, this was such a sick. Well, here's the point of the trade: that A+ prime time setup. And look what happens. I mean, you got paid so quickly and so unbelievably. You're how much happier could you be in a trade that you buy and literally just goes straight up? So there you go. There's on that squeeze move almost to 25. So a solid double. Easy solid double right here. And you have over a month and a half on these calls here. Relatively conservative strike with over a month and a half on that prime time setup on that daily. Like, that's like the holy grail of setups that I showed you. Right here. It does not get better than this. What I was explaining here. Like, this is the perfect setup right here. The perfect, like, I mean, I don't know how I can nitpick this to make it a better setup. What I'm describing. So anyway, my hypothetical was, if you took, let's just say the market, every year, you're going to at least get 5 of these types of setups. Okay, 5. Here's another one. Right here. This big rip up. Now, I'm not saying I would have got in here, but okay, so it showed signs of weakness here. I'm not going to look at the chart. But even if you got in anywhere here, so this is beginning of April, you would be buying the June 450s. Okay? June 450s, anywhere in here. If you would have bought anywhere in this bear flag, you immediately, what do we fall? 15 points in a week? Bam, you got paid. At least the double here. So here's another pretty good setup here that after this big move here, again, I wasn't swing trading, otherwise I would have taken the trade. But this is unsustainable, this posture here. The MACD wasn't ideal here, as far as like screaming off the chart that this is not going to hold. But this huge rip up here and the posture of the MAs, there's no way it's going to support this 9 and 20. Like, what? It's just going to keep going grinding. And the posture of these MAs is horrible. Anyway, let me just get to the point here. You're going to get 5 trades like this a year. So my hypothetical was starting with $1,000 in 1 year if you just waited for these setups here and went all in. Okay, starting with $1,000. So after 5 trades, your first trade, 2,000, 4,000, 8,000, 16,000, 32,000. Okay, if you just waited just for those setups in 1 year, if you got 5 trades like that in 1 year, we're just using 5, like guaranteed in 1 year, you're going to get 5 of these setups. Okay, the setups that are screaming, that are jumping off the chart. Here's free money. Do you want free money? Come and get it. Okay, and I'm just using 100% on each trade, because some of these trades, could be a 3-bagger going a month out on some puts or calls on options. So, that's being kind of conservative with using a double. But, every trade's not going to be perfect, but using just a double. So, in 1 year, if you took 5 trades and doubled, you'd have 32 grand in 1 year with $1,000. And because you only put $1,000 in there, and you're waiting for these prime time setups, you're going to be much more comfortable going all in. And then if it doesn't work out, it was $1,000. Now once you get to 1,000 to 16 grand going all in, maybe you only do half. Maybe you put 8 grand in, because now you're like, okay, well, why? Maybe I'm not going to take that risk now that the account's bigger. Or maybe you do go all in, and maybe when you're up 50%, you take the 50%. You get scared. You're like, okay, I just I got 24 grand now from 16. I'm not going to get greedy here. And then there you go. You're at 25 grand. Then you could day trade. So maybe intraday, you could sell that 50% move and reload on the dip. So that's okay. I know this is kind of drawn out here, but that's where it started with my thought experiment on how to approach trading. And it really boils down to is being more patient, looking for A+ setups. Because there's always a setup, and that's how the market sucks you in. The market sucks you in. Every great setup has to start somewhere. But every setup is not a great setup. Okay? So right here was the bottom. Okay? Now, I didn't see anything on the hourly or the 15-minute. Nothing was telling you to buy this bottom here. And this is going to be a temporary bottom. I mean, look how you got paid here. I mean, this is sick. You caught 14 points off the bottom. So this was a setup here. This kind of divergent bottom here. But you didn't know that. Okay? So you don't know that. So now taking the trade on an intraday basis, you could see a setup, but you don't know if that setup's going to turn into a great setup. Because there's not enough evidence to support, okay, we might get a big move out of this. And that's why trading is hard. Because, this was a pretty good bounce here. But the point I'm getting at is, when you see the setup, it boils on being more patient. When you see the setup, you don't know how much of a move you're going to get out of it. So the point I'm trying to say is, if you don't have all those pieces of the puzzle telling you this is an A+ setup, you don't have a high probability setup here that this is an A+ setup. It may turn into a sick trade, but the chart doesn't support a high probability of this being an A+ setup. So see what I'm saying there? So that's why you got to be more patient taking your trades, waiting for those A+ setups that give you a higher probability of the setup turning into an amazing trade, rather than seeing whatever setup and then hoping it turns into much, much more without the multiple time frames telling you, all right, there is a really good chance here this is gonna, we're gonna get a nice move out of this. So all boils on the patience. So let me wrap it up with that compound interest calculator. Let me wrap it up with this, and this is what I wanted to talk about last week. So here's the idea here, okay? You're not going to win every day, but it just shows you in 2 months, starting with $500, okay, you can do very, very well, quote unquote, only making 10% a day on the account. I mean, when you think about it, I mean, okay, here's why this is ridiculous also. So again, it's a thought experiment. Here's why it's ridiculous. Starting with $500 the first month, you're at $3,300. The second month, you're at 22 grand. You want to see where you're at in 3 months, starting with $500? Okay, 150 grand. Okay, come on. So, that's not reality. Now, however, once your 500 turns into 50 grand, you know how hard it's going to be going, taking those kind of trades. The bigger you get, the harder it is to scale. Turning 500 into 3 grand or 10 grand or 20 grand is just psychologically it's easy to do. But once you have 50 grand, 100 grand, okay, so 3 months you're at 150 grand. Let's look where we're at in 4 months. Okay, $500 in 4 months, 10% a day. Okay, here's where it gets silly. Okay, you're over $1 million. Okay, so Now, obviously, that's not possible to sustain that because keep going here, and by the end of the year, you're going to be richer than Warren Buffett. Okay, so obviously this can't work, and at the same time, it can't work because even if you did this 500 to a million in 4 months, okay, as the number gets bigger, how are you going to trade this? So obviously you can't turn into Warren Buffett just for the fact that once you have $50 million in your account, I don't even know how that would work out. Putting $5 million on some scalp trades. I mean, do the math on how many contracts are traded on any option at any given point. You're gonna throw $5 million on a trade. How's that even going to move the market? I don't even know, because those market makers will have to go out and counteract that trade. So I don't even know how that works, but you get my point. It's the thought experiment of slow and steady wins the race. It's the idea that here's an example with the $500. So just given how I trade, hypothetically with this 500, quote unquote, only making 10%, only $50 today. Just psychologically, let's say I used 100 out of this 500, and again, with my minimum doubles. So if I only traded with $100 out of this 500, I got my double, I made $100. Well, I just made 2 days worth of profits in 1 day. But sticking to the 10% idea, $50, I mean, now granted, you got to trade what the market gives you. So if there's a sweet setup here, well, obviously, you're going to have to attack when you see that better setup. But psychologically, making the $50 in 1 day and being happy and like, okay, I did good, that's so hard to do. And it's so tempting when you see other setups just to have those itchy fingers to press the button. And maybe I see like a pretty nice scalp, like, oh, we're gonna bounce at least a point, and I can take another $100, easily make another 50% or maybe 30%. But you see how you get caught up in that, and that's why it's hard to, number one, do that, and to have the discipline to stick to this kind of this. Now here's another one. Let's try 20%. Now, me personally, I'm extremely confident with 10%. Extremely. 20%, this is pushing. Not that I can't make 20% in a day, but to maintain this is difficult. Well, obviously, right? But in 1 month with $500 at 20%, you're at 20 grand in 1 month with $500. Okay, you want to see how silly it gets? In 2 months, at 20% a day, you're at 700 grand. Okay, so obviously this is ridiculous. But just me personally, when I played with this 20% number, I thought I could do this. But as days go on, this is very difficult. This is very difficult. Even to do this for like a week, this is difficult. 20% is difficult. Another perspective, to make the 10% a day, okay, and the 10% is very realistic. Well, I don't want to say very realistic, but it's possible. 10% is possible, because in order to meet your 10% goal, you have to double 10% of the account. So with $500, one $50 trade, you double, you make 100% on one $50 trade, you hit your goal. So that's not that crazy when you look at it like that, because you just have to put 10% of the account on one trade and double. Now, again, you can do multiple trades, but the point is 10% of the account If you could double that, you met your goal. So, let's say you take five trades, and you make 20% on each trade. Or even 10% on each trade. So you could take 5 trades, you could take $500 trades and make 10% on each trade. Very possible. 10% on options, I mean, that could happen on a 1-minute candle. So see where I'm getting at with this thought experiment here? So this is for me. I did this for me, but I'm just trying to show you guys just to approach trading differently day by day and to be more patient. So at a minimum, this is going to help you be more patient because you can see over time where this can take you. So like, I'm extremely confident with 10% a day, okay? Because like what I just said right before I said that, 5 trades at 10% a trade, 10% on options is, well, I'm not going to say it's easy because you can't win all the time, but assuming you're profitable on a trade, 10% is nothing. Nothing. This would be extremely hard to break up my trades over multiple scalps, and that's also more, a headache too. Scalping is more of a headache too, but your risk is spread out. And if I were to do this, it would be extremely difficult. You know why I would fail at this? It would be so difficult only making 10% on a scalp, because 10% on options is nothing. Like I said, 10% could happen in a 1-minute candle. I mean, you can make 10% on a 25-cent move in SPY. I mean, that's nothing. But look where it can get you. But like I said, it would be extremely difficult. So I'm confident I can do this. Why haven't I done this? Because I can't stick to it. I fail because I get, relative to this plan, I get greedy. I can't stick to this plan. That's why I failed. So how crazy is that? Because again, I couldn't leave my slave job any sooner. Like, I needed been out of there a long time ago. So when you look at it like this, a month is a long time. I needed been out of there like last year, okay? Let alone last week or last month, or so taking a slower approach here, trying to be patient like this, knowing that after a month, you're still not anywhere, but well, here you go though. But after 2 months, starting with just a small account like that, well, there you go. Now you're knocking on the door to being a full-time trader in only 2 months, which is nothing. But again, it's the thought experiment. And what I just said is I can't stick to this 10% a day, especially when the market gives you 6 setups, when the market's really working. I mean, you've seen my trades, where a week straight I'm knocking 3-baggers and 4-baggers day to day, and see, that's what's hard though. See, you're going to average 10% a day. So what I just said there, you get a week where the market's hot and I'm pulling 3, 4, 5-baggers every day. Well, the market doesn't always give you that. There's a Market Wizards quote. I forgot what it was, but essentially boils down to 80 to 90% of the time the market's really not doing anything. A very small percent of the time the market's really moving and giving you those opportunities, and that's why trading is difficult. It boils down to that patience, being patient, waiting for that setup. Because most of the time you're not getting these grand slam or home run setups. So you have to approach every single day looking for just a modest gain. just looking for base hits every day, base hits, doubles, maybe a triple, and maybe you hit that home run. Maybe you hit the home run. But me, I go into every day um, looking for the home run setup, and I don't mean 10 points in SPY. I just mean not 10% on a trade. For me, the 100, a double or better, I'm happy with, which the market does give you doubles every day, but there's some days where maybe the best setup of the day was a double. What about the other 5 setups that gave you 30%, maybe 50%? So as the saying goes, green is green. So let's say applying this idea here, let's say you only make 5% on one of the days. I mean, that's $25. You're going to sit all day in front of the computer, just frying your brain, staring at charts and looking for stuff to make $25. But I mean, well, you have to. That's trading. But see, that's why it's so difficult, because look where this will take you. You're not going to make 10% every day. So maybe the one day you make 5%. I mean, maybe one day you're red. You could lose, obviously. But just using the winning aspect, let's say you only make 5% on a day, which is $25. Okay, well, that $25 sure is a hell lot better than losing $25. Or getting greedy, and then psychologically, you're 50% winner. You didn't take the profit. It goes against you. Now you're only up 20%. You're flat. It bounces up 10%. You don't get out of the trade, and that 50% winner spirals into a loss. So instead of maybe making a couple days worth of profits on that 50% winner, you got kind of greedy. You got kind of trapped in the trade when it pulled back, and now instead of making a couple days worth of profits that will get you here in 2 months, now you lost a couple days profits, and now you go into the next day, looking at least to make that 100% gain on a trade, and see how that could spiral out of control. And then you're kind of forcing the trade, and that's trading for you. That's trading. I mean, I've lived it. So everything I'm telling you is what I lived and experienced myself, and I'm sure everyone else in this room has. Here's an example. My last video, here, because I really thought it was going to happen. Well, Vlad, you weren't here on Friday, but my last video is called Big Bounce Bottom Fishing Friday. I really thought we were going to get a nice flush on Friday. Cracking 360. I wasn't looking for 355, but I was looking for a 360 crack on Friday. And I actually went short here. That's another problem I have too. I really got to look at both sides of the chart. It's just a bad habit. I know to do it. I do it, but sometimes I don't. So here, in hindsight, well, obviously in hindsight, it wasn't a good area to get short based on the bullish posture from the bullish side. Looking at here, I was looking at the inverse, and I thought at this point I didn't think they were going to go for 360, but I thought they were going to break the low, maybe 360. But anyway, going into naming my video there, Big Bounce what was it, Big Bounce Flush from Friday, whatever it was called. And it didn't happen. The market doesn't always give you what you want. And so that's just an example of, you got to take what the market's currently giving you. Alright, I'm pretty tired from all that talking. But I wanted to talk about that last week. About the power of compound interest. So, see, this is why I didn't, what I said earlier about there's no reason to get in. So, here, this was a pretty good pullback. But again, look how long it took. I guarantee you, this was probably not even a double here. Probably not even a double. I could almost guarantee that. So where are we at here? So let's say you bought the 375s. Alright, so the 375s from low to high. Yeah, if you bottom ticked it, you doubled your money. You'd have to essentially bottom and top tick those puts to double your money here. Okay, well, obviously what I just said, I mean, yeah, that's a great trade. Based on what I just said. Let's say you only caught 50%. So yeah, that's great. But you're also kind of picking the top here. And they sort of let you in here. After this move, this wasn't a bad back test to get in here. So you did have good entry. Pretty good entry right here on that back test. Once we had this confirmed pullback off the top. Here's another thing that I don't always do. A very simple concept. Very simple, just only trading the candles. So this is a confirmed bearish engulfing pattern. It got follow through on the very next candle, closing well below the prior candle. Now granted, you do kind of have this support here and here, okay, and that's why you kind of got this bounce and this kind of congestion, this bounce, okay. So, but the very simple concept, this was a bearish engulfing candle confirmed. So on this back test, you could have been short against this bearish engulfing candle. Here's a bullish engulfing candle. Confirmed on the next candle, closing above the 9. Here's your back test. They let you in. So right now, if you got in on this candle here, we don't know where this is going to go. But very simple concept of trading candlestick patterns. Confirmed bullish engulfing candle. They let you in nicely. Closing, holding above the 9. Where it goes, we don't know, but that's a great entry. If only for a scalp. I mean, let's look at the 1 minute. So you got on this 1120 candle. Okay, so beautiful back test. You could have got in against this 40 here. Here's your back test. Here's your pullback. Beautiful entry here, beautiful. So in literally 6 minutes, you caught a solid 50 cents in SPY. So if you're scalping futures, that would have been a beautiful scalp. But that quickly, okay, so let's see what we would have got there. Let's see as a day trade, if I took my new approach, 10% a day. Well, I'll guarantee this is 10%. So on the 1121 candle, if I would have bought the 375s, let's see what that would have got us. I could have got, okay, so nice big fat round number of $1. They cracked the dollar. They hit 97 cents. So I know I would have been bidding the dollar right there. So I got them at $1, and they went up without top taking it, you would have caught 25% on this move right here. So there's a scalp right there, 25%. So using what I just was talking about with the $500 account, I would have been super confident about this. I would want a better setup for, a bigger move. I'm not talking 3 points, but at least a point. But that's assuming you took the scalp, you locked in the profit. So on a $500 account, let's say you put the $100 in there, you made $25. So guess what? You only have to make another $25 today, with $400 left to trade with in the account. There you go. Is it not that simple? So I've been really thinking about this. Like, it really boils down to being patient. Because had I been trading like this, even just this year, not only would I be a full-time trader, I would be killing it. Killing it. Because the power of compound interest, once the account is above PDT, now that 10% a day, you could be scalping all day long. With over 25 in the account, you could be taking scalps all day long. So you better believe I would be scalping this, and I could be going heavier because I am going in as a scalp. So it gave you 25%. Well, it's paying you more if you would have stayed in. So now you're up 35%. Very likely to go up to 50% on this trade right here, on this beautiful setup that I just laid out here. So right now we're up 40%. Okay, but as a scalp, this was a beautiful trade right here. Again, I'm not saying I would have sold here, but as a scalp, if you are a scalper, this was a great scalp because we got into this congestion right here. So if you got that great entry there, 50 cents on a scalp is beautiful. Beautiful. I have cash. I do have a cash account. But, like I told you before, I still have to work my slave job. I have a lot of bills. I don't have a whole lot of money in my account. But I'm just, this is all tying to what I was talking about because I'm not looking for 10% because I want those bigger runs. I also am not a huge fan of scalping either. Just in and out. Like it's a headache. Scalping. It's a headache. I'm not saying scalp this like that scalping. This didn't have to be a scalp, but it's a very high probability trade taking it as a scalp because you don't know where this is going. This wasn't the best setup on the 5 minute, and there's other stuff at play here. So this would have been a scalp because staying in wasn't the best idea because that ties into what I said earlier. So let's say, okay, I'm looking for 50% on the trade. Well, this pullback happens. So now you just gave up almost all your gains here. Who knows where this led to. So you made 25% on the trade. This is tying into, God forbid I only make 50% on the trade. Because then if you play that game looking for more, the risk is that much higher staying in the trade when the quote-unquote guarantee is the short bounce higher. You don't know that this is going to continue. That's where your risk is growing and growing, staying in, hoping this holds, hoping. Because the 5 minute is not saying this has to hold. The 5 minute, yes, we are starting to curl up here, but this is not a confirmed momentum play here. Okay, this is not a confirmed momentum play here, where you have confirmed momentum in your direction, where at a minimum, we're probably not going to just pull back hard. So this had to be a scalp. And look right here. Look what's happening here. There's a very good chance we do roll over here. I'm not saying right now. But there's a very good chance that I think they do push a little higher. Maybe up to this 50. But you don't know that. That's the point I'm trying to say here, this whole talk. That's what I'm just trying to say. So this isn't just for me, this is for everybody, depending how you trade here. That was a beautiful trade that I just laid out. Let's look back at the 5-minute. I got this idea when I was talking about the top. Confirmed bearish engulfing pattern. They let you in on the back test. You got paid. Confirmed bullish engulfing, closing above the 9. They let you in on the back test, and you got paid. Well, not even here. Here, you got paid here. That's where you got paid. Okay? This is not a setup to stay in this trade here. You're gambling if you got in wherever here and you're staying in the trade. Now, granted, you could always just cut, take the gain if it goes against you or whatever. You can have your number that you're going to go out if it comes back. Okay, so you can always just get out of the trade. But the idea I'm trying to say is it's not that easy. How many people are that disciplined that, okay, if it breaks this level, I'm out? You're talking options here too. So what if we go sideways for another 30 minutes? Theta starts eating into that profit. So you bought here, but after that sideways move, we only have to go back here for you to break even. And then what are you going to do? You sat in this trade for maybe almost an hour just to break even. You're going to have that discipline? No, you're not. Because you didn't sit in the trade for a whole hour after it went up 40%. You didn't lock it in. Now you're break even. You're not going to sit in that trade. Who's disciplined like that? You're not going to do that. That's the point of what I'm trying to say here. This whole talk. This is a philosophical discussion about trading here. Trading philosophy here. Approach, mindset, all this stuff here. But it all boils back to this. It all boils back to this right here. This is the foundation of what I'm trying to explain here, is this right here. That, and there's a guy I follow, I knew this before, but he talks about, he mentions it, at least on a weekly basis. He has daily videos, so at least on a weekly basis he'll mention that you only need to be right 40% of the time to be profitable. And it's true. With the 2 to 1 risk to reward criteria, you could be right less than 50% of the time to be profitable. So why aren't traders profitable? Well, exactly what I explained here. And that's exactly why I'm not profitable. Exactly what I just discussed right here. I mean, even talking about it, knowing it, all that stuff, I mean, no matter what, you could know it and you could have all this memorized and you could be, talking to yourself throughout the day, talking about all this stuff to just keep it in your head, and you could still lose. Trading is extremely difficult. It's one of the hardest things you can do. To make it as a living as a trader, like the 3 to maybe 5% of traders that make it as a living, you know what has those same odds of success? Professional athletes. So if you make it as a trader, as a full-time trader, and your only source of income is trading the market, you are NFL, NBA, MLB, NHL caliber trader. It's just a fact, because those are the odds of making it to the pros. So imagine all the people in high school on whatever sport, all the best people that made it to college, and from college, all the best people at college. Out of all those best people, 3 to 5% of them make it to the pros. Those are your odds as a trader. To say, my profession is trading as your only source of income. So it's extremely, extremely difficult. Extremely. That's why 90% of traders lose money. Everything that I laid out here. And you have to you have to fail over and over and over until these lessons are burned into your head. Not only your head, into your subconscious. This has to become a part of you. You have to experience so much pain. It's like a dog that's been beaten, an abused dog. You essentially turn into an abused dog to become a great trader, because you're so conditioned to all the pain that you've experienced that the second something looks like it's going to give you that pain, you have to act on that. And your body's going to naturally react to that potential of pain and do whatever it takes to not experience that pain again. That's essentially what you're doing as a trader, because you're only going to learn through pain. That's why they say one of the worst things that can happen as a trader is to make it from the get-go, because you are going to lose every penny of that. That's the worst thing that could happen as a trader. So either right from the get-go, or within 3 months, 6 months, a year of starting to trade, that you become successful. That's probably the worst thing that can happen to a trader, because you're going to build that account up to wherever it gets to, and one day it's going to be all gone. Guaranteed, all gone. Yeah, that's why I've been sitting on my hands here. So right now, it's not looking bad. Right now, on the next candle, tough to say. I didn't even look at all the charts yet. But just looking here at the 30-minute, there's going to be another push past high day. Right now, this is an 80% probability. High day will be broken, likely on the next 1 or 2 candles. Well, there you go, IT. On the puts, off of there. Yeah, again, I didn't look at all the charts, but looking at this 15-minute, this was a beautiful entry right here. This posture right here on the Stoke, yeah, they could see. That's why it's hard to get in when you don't have an ideal setup, because right here, the curve on my chart, what curve? Well, if you took it off my chart, then I'll send you the bill for that that commission there that you owe me. What curve are you talking about? And that's another thing. Again, this is not bragging. You guys are the normal people here, but I'm not. I don't brag. Okay. What curve are you talking about? What curve? The MA. What are you talking about here? The MACD. On what? MAs, MACD. What are you talking about? On which time frame? Oh, on the 5-minute? Oh, when I was talking about the 200? Or this hockey stick? The hockey stick, I was saying this was supportive or not to sit on your hands. There's not really a good trade because we could have went higher. Oh yeah, these MAs. I was just saying how they're not supportive of a long trade. So if you were up here thinking about the MAs, oh yeah, well what I meant about the hockey that this is supportive of us going higher. So when you see a hockey stick, when an MA starts to increase, well, this is decreasing the slope, so it's a little different hockey stick, but yeah, I actually interpreted that the wrong way because oh yeah, no, I actually now that I look at it, I interpret it the wrong way. Normally, when this happens, when the slope increases, um, I kind of hold on, I'm kind of lost here with it. But if anything, there was a possibility for them to spike a little more. That's what I meant when I was talking about here. But I was saying these MAs aren't supportive of a long trade. You know, when we're up here, or we're here too. But you know, we're very extended. Look at the 200 here falling. I mean, man. You know what? Now that I look again, I didn't look at the charts. I did not study the charts yet. I've been talking this whole time. The look of this 200, I hope they push it up. Because you know what? We're going to have a great short. This is not supportive. This is, again, this is like, I'm not saying we're crashing, but this is still even falling down. Even if this flattens, the higher they push here, the better the setup is going to be. Yeah. But anyway, so, okay, what I meant to say with IT, so he saw the curve on my chart. What I meant to say is, you know, not that I have every setup written on my chart here, but, you know, I pretty much use the bread and butter of technical analysis. So when you see stuff on my chart, just like this trend line here, that's why I leave trend lines. This was from, this line right here was from here, from these prior pivots in October 2020. Okay, so this trend that never, well, it's a trend. Any 2 points can make a trend line. But it was 2 tags and that's it. So here we are, a year and a half later. And I mean, come on. It just so happens to be resistance respected 2 days. Look at this. I mean, look at on the gap down. They held it on the gap down. So this huge gap down, falling out of bed here, and they just so happen to park it right here on the first little consolidation. I mean, come on. And then, you know, once they got under it, resistance, 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 resistance. Okay? That's why I leave trend lines. It looks like shit on the daily. You know, I cleared the chart when I want to look at the daily. But just look with no trend lines here. You know, what is this telling you? I mean, obviously you got your MAs and everything else, but you got nothing to go by. You have no up here. So where are we going up here? We could just that all this space up here. Well, I mean, yeah, there is some space. You know, you got this here, but when you do this, now you go, oh, okay, maybe this will act as a magnet. You know, they couldn't hold it here. This is not a great one. You know, it kind of went above it here. But the point is, when you're up here, they're not going here today. That's like a 5% chance we run 380 today. But let's say, hypothetically, let's say this was here. Well, guess what? If this trend line was here, I would be looking to go long saying, we're probably going there today. No guarantee, but we're probably going there today. If even on a spike. Regardless if we're going there, if we get to any trend line and we're a little extended or whatever, you don't know how much further we can go. Well, the fact that it hits some kind of line, and you know these are thicker lines here. These aren't just like this line here. You know, I make them thick accordingly to, you know, how much weight they have. But if you're at one of these lines and the chart's a little extended, well, there you go. The trade's over. If it goes more, who cares? You're not trying to pick tops and bottoms here. So here you go. Back to this here. This, textbook candlestick pattern that you got in here. You immediately got paid right here, 25% immediately in 6 minutes, is now still working out. Now, those 275s, okay, now look at this shit. Okay, look at this. See, this is why, if the setup's not prime time, you need to get out. Because remember I said, what if here it went sideways? That theta would have killed you. And look, it would have killed you. Look at this. Look at this. So that quick run from here in 6 minutes, you made 25%. Okay, so you bought for $1, nice round $1.25 number, bam, I'm out. So hoping that they push higher rather than getting paid in 6 minutes, 25%. This extra push got you what? Another 10%? Hoping that happens. Rather than locking in a guaranteed 25% in 6 minutes, staying in, you're hoping we go higher. Now here, look on this further push. So this hit $1.35, let's just say. You're not going to top ticket. $1.35. This hit $1.45. So yeah, you made another 20% here, but look how much time passed. 30 minutes passed, and you didn't know this was going to happen. You're hoping, staying in the trade, hoping when the beautiful setup here that paid you in 6 minutes here, that's why you got in the trade. And you got paid in 6 minutes, 25%. Okay, so let's go back to the 10% a day. Let's say with a $500 account, you put the $100, you made 25 bucks. You only have to make 25 more bucks. You got 4 more trades with $100. So bam, you caught that. Now let's look at the chart. Where could you have maybe gotten again? Okay, this isn't a great setup here. But let's just say with it holding this 375 here. Okay, right here you got this little doji. Okay, here's the confirmation of the doji. Okay, you could got in on one of these candles, and it's not just saying because it broke out, but technically speaking, this doji was confirmed on this 1 minute right here. So using basic candlestick patterns, this confirmed this pause, saying they're probably going to at least try to spike this. So here, if you got in the 376s, you could have got them for right here. Oh, well, those are the 75s. Okay, whatever. You made your 10% right here. This wasn't ideal, but it's just trying to illustrate you only need to make the 10% a day, and where that can get you. And again, this is what options here. So if you're scalping ES, well, let's look at ES here. What is it? 10 bucks a handle? Oh, let me make sure. Okay. ES is 10 bucks a handle. So right here, there's your entry. Okay, you caught 5 handles right there. Okay. So if you're scalping, okay, with one contract, there's 25 bucks. 25 bucks there with one contract. And this was a relatively okay setup here, with the assumption that they're at least going to spike these highs. Who knows where this is going to go? You're not staying in for high daybreak. The trade setup is they're at least going to spike these pivots, and bam, you got paid immediately. Immediately got paid. So with the one contract, you made your 20, 25 bucks. And for a scalp, that's great. You literally got paid in 2 minutes. Now here, this is a setup to get in against this low that they're going to spike this high. So let's say right now we got in at 74. Okay, we're sitting on the bid at 74. Okay, we're in. We're in at 74 here with a 1 point stop loss at 73. We're in at 74. We're looking for 76 right here. We're looking for 2 points. I forgot what Tradeovate. Tradeovate was very cheap. I don't know if it was $3. I totally forgot commissions. Totally, I don't even know. But I know Tradeovate was very, very low. Okay, so we got our order at 76. We're in at 74. 73 stop. We're risking 1 point to make 2. This isn't an ideal setup, but it's a setup, you know, with a tight stop here. Okay, we're probably going to get stopped out here. Let's see if they stop us out here. I don't think they will, actually. But that would be the stop out point. They're going to stop you out at 73, spike here, and then go. But there's our stop. We're risking 1 point. And we're out. Okay, so we lost a point there. So there you go. Lost a point there. I think this is still going to hold. Actually, now it's changing. I take that back. This changes to this look here. Before that just happened, this had the look of they could very well just spike this. Now we have this here. Right now I can't tell you what's going to happen. They already bounced off of it a couple times, so they may. I don't know what's going to happen here, but they could still come back down here, maybe crack that 70, and then go for that 75 break. Alright, here, I gotta... Oh yeah, speaking of EMAs, I think I might start playing with EMAs. Not saying that... yeah, look at this ugly chart, by the way. I don't know what happened here. The chart got broken yesterday. I don't know what the hell happened here. Sometimes this happens here. But, I may start experimenting with EMAs. Now here's the thing. There's no holy grail. So if the EMA tells you something that doesn't show on the regular MA, vice versa. No, that's not why the chart's broken. It had an intraday gap with the market being open. But this is just the chart got broken. It happens sometimes. The charts it is broken right here, 9:55 to 10:15 p.m. Look at it. You can see right here. It's broken. Look at the gaps. Yeah. Oh yeah, they're faster. So there's no holy grail. So what the EMA may tell you that the regular MA doesn't tell you is also what the regular MA will tell you that the EMA won't tell you. So that's why I don't mess with MACD settings. Okay. I don't mess with MACD settings because there's nothing that works for everything. So if there's some ideal setup in this kind of market, okay, maybe there is, maybe it does work, but then you have to change it back because it doesn't work in the next market. So the bottom line is, you could change it all you want. It could look a little different. It's still telling you the same story here. Right here, we got a cross from below the zero line. Momentum's waning. Right now, there's no reason to be long. The odds are, the more and more this pinches here on this extension, you know, you're cracking below 5% probability that this is going to continue higher. Okay, so you don't have to get all fancy. Yeah, see what VWAP, speaking of VWAP never helps me. Okay, So we're above VWAP. Okay, so buy the dip, right? We're above VWAP. That's bullish, right? Okay, it worked there. They came short of it. So where did you? How did VWAP help you here? It helped you here at the open. There's your opening candle. We're above VWAP. You could have just got in. You know, your MACD supporting it. You're above VWAP. All right, I'm buying that opening candle close. It worked. But you didn't need VWAP to tell you that. You're also above all the MAs. You got MACD in your favor. And you have the Stochn in your favor entering the power zone. So if it works for you, that's fine. I'm not... you know, whatever works for anyone, you know. I just laid out a simple idea of candlestick patterns with this bearish engulfing pattern and this bullish engulfing pattern. So you could trade just on candlesticks. And without using, oh, is momentum waning, you know, you could get in, catch your little move there, and then that's it. Well, yeah, I know, but that's what I'm saying too. The MAs tell you the same thing too. Going into today, the MAs are clearly bullish. We've been bullish since Friday. The MAs, this is a clear uptrend. You don't have to look at anything. You know, even the VWAP here, the VWAP, we got below the VWAP, so are we bearish now? Well, no, obviously you can't use just VWAP because we're getting support at the 200. So the MAs the whole time kind of painted a better picture. Whereas VWAP, you know, you kind of got below it and this and that. You got chopped out shorting below VWAP here. Look at that fake out. Look at that fake out. So here VWAP didn't help you at all. The MAs told the tale because this is a nice fanned out posture on these MAs. This is beautiful. I just you know, VWAP, you know, I have it there as a reference point just to see where we are in relation to VWAP because, you know, people look at VWAP, but it doesn't help me. I don't use it. It's just there as a reference point, kind of like the 200. How far are we away from the 200? How extended are we? You know, given how far extended we are, what are the odds this trend is sustainable given the distance from VWAP or the MAs? Well, yeah, the MAs, that's why you have to look at the 1 minute. So right here, okay, you got the cross right here. So granted, if you took a trade here, yeah, it worked out here. But you also had this bear flag on the candles. You had the bearish engulfing pattern. You had the waning MACD momentum. So you have, these are all pieces of the puzzle that gave you a trader. I just looked right here. This is a rising wedge. Not the best one, but you kind of got a rising wedge here. You had all this stuff stacked up, you know, extended from VWAP, all that stuff there. But on the 1 minute, that's why you look at the 1 minute. Because there's your cross. So there's your 1 minute cross right here, and there's your back test. Bam. Now, okay, in hindsight, obviously, but it's just illustrating the concept. So there is your cross, because the 5 minute MA crosses, I don't know what the odds are, but they don't work as much because they take longer, especially in a fast market. But here's your cross on the 1 minute. There's your entry. So here's your cross. This whole time here, look, never cross, never cross, never cross. There's your cross. Okay. There's your signal to look for a short. And this was beautiful because there is the bearish engulfer that confirmed on the next candle on the 5 minute, and there's your back test in this bear flag on the 1 minute with the cross into the MAs. There's your beautiful back test right here. You could use 1 minute closes above this 77.5 on the 1 minute to start to get worried about the short. So what did it do? It gave you a beautiful back test entry and never looked back. So this was a beautiful trade. And you know, I illustrated those trades, and this trade right here, as it was still kind of shaping out here, here is the reverse of this that paid you immediately here, and now it's continuing to work. But the idea was just to show the 10% a day, the 10% a day concept, and why you don't need to make a lot every day to make it in the long run. And being more conservative is the better approach. My problem is I stay in trades too long. Most people have the opposite problem. And here's the move I was talking about here. Selling at 76. There you go. You're out at 76. I mean, we got stopped out there. But that's what I was looking for. I thought they were going to do here just a quick move. Now this is probably going to turn into high day break. But I thought they were going to do it here quickly and then pull back. And there you go, 76. Well, it's the high here. 76 and a quarter. So the trade worked and it didn't work. That might be it. So my 76 sell was right as far as, where could they go on the spike? I mean, this may continue, but that was a great sell. And what's cool too is actually because less people trade MES, the minis. So it's crazy because I've gotten filled where regular ES, because regular ES and MES slightly differ. So right here, let's say this only hits 76 on this high here instead of 76 and a quarter. I've had it before on MES where ES hits 76 and I had my order at 76, but I get filled on MES because MES hit 76 and a quarter. I've noticed that I gotten yeah, but they're not the same price. You'll have quarter point differences like that in MES. So let's look right here. There you go, 76.5. See what I just said right there. See that? MES went higher, 76.5. And I think what it has to do is, you know why? Is that why? They're both September. They're both September expiration. But I think the reason why is because more amateurs trade MES. That's why. Well, it doesn't matter which one you pick. This is the same one, apples to apples. But my idea, the reason I think, I may be wrong, but is because more amateurs are trading the minis. So it overshoots a little bit more because you get all those amateurs panicking out of their contracts. So you get those little extra fills. That's my guess. Because people trading regular ES are unlikely. They're likely more seasoned traders, and you're gonna get all the dumb money in the micros, giving futures a shot. That's why you get those fills. All right, so I didn't even look at the charts. I've been talking all day here. So yeah, I hope this continues because I'll be looking for a short. Oh, that's weird. Yeah, right now it's still looking good for high day break, but the SPY chart's ugly. This SPY chart, the 5-minute, the hourly's, not so hot, but this 5-minute. Oh, let's look for a target here. That's a bit of a stretch today, but I would love if we hit 378 sooner than later, because that would give us a great short back down to at least 76. Again, I didn't look at all the charts, so I got to see what we're working with today here. Yeah, it's tough to say. We got to see how this. Well, I mean, we're going to close above 375 in the next 13 minutes, but this 4 hour and this 1 hour. Um, this is telling me, you know, we're breaking high day for sure. I'd be a little shocked if we didn't, and it's probably going to happen on this next hourly candle. The higher the better. I would love for them to hit 378. If somehow we hit 378, um, if we get there, I'll be looking at the 377 puts. Oh, oh, oh. Remember when I was talking about lower before higher? And again, I didn't know this was going to happen that quickly. But remember how I was talking about this is a simple back test of prior resistance? And boy, did that work out. How about that, right? Look at the daily. Remember here I was talking about this? When we're in this bullshit flag here? You know, the whole time I said I didn't trust it. Lower before higher. This whole flag I was talking about it. I was fighting the tape the whole time. But I remember saying how if you looked at a 5-minute chart, this move, this is just a simple pullback into prior resistance that's now acting as support. And boy, did that work out. See, this is why you have to trust the chart. Now, timing is everything, obviously, but when I was saying that there, I was how do I explain it? Well, I was gonna say I wasn't super confident about it because I don't swing trade. But if I was in a position to swing trade, I would have been pretty comfortable here, you know, building a position. For at a minimum, you know, 400. I wouldn't be building a position that this is going to happen. Nobody knew this was going to happen. But from here, that 400, maybe 400 crack. Well, at the time it was the gap. So being realistic, being conservative, it was the 400 gap, which we hit it this day. But if I was swing trading, that changes the story here because I would be holding a position, you know, at least 2 weeks out. So on this day, I would have caught this whole move here and probably held. I mean, who knows? But you know, I would for sure held half of it for a swing, and then you know that would have been sick. You know, I would probably sold all of it here, and then just waited. Probably would not have held any after this day. But the idea of prior resistance acting as support, I was talking about that. That whole week leading up to this. Yeah, right now it's tough to say where this is going to lead us, but the chart's still in position, even with this gap down, to break 360 this week. And I really hope it does. I really hope it does, because we're going to see if we can break 360 this week, depending how we get there. Where we, are they going to gap down tomorrow? Depending how we get there, hopefully it happens not on a big gap, because then we could possibly see at a minimum a 10-point bounce off those lows, likely 15 points if we get that 360 flush. But I don't think this is over. Do they break 380? Maybe. Maybe. It's tough to say right now. But right now, I would probably say as the chart is right now, because this gap down really threw a wrench in it. The Bears have a 60% edge to make a run for 360 this week, as of right now. Once we get into tomorrow and how the chart, the 4-hour and the 1-hour, how they shape up, will change that probability. But I think 360 still has a good chance at breaking this week. No, they're not giving you anything, because it's not a good market. So this is an interesting look here. So we'll see. I hope on the next 15-minute hourly candle they spike high day and then stay under 376 on the 15-minute, because so far we have a decent potential short setup here. And that 5-minute is kind of the smoking gun here. So this 200 now starting to try to turn. But I'm not going to be comfortable unless they break high again, because I still think they will break high again. Yo, what's up? So hopefully in a relatively short fashion, or quick, in short order here. Oh, okay. It looked like I had two. Oh, I do have two fibs. Where's this crap coming from? Oh, that's the overall fib. Oh, okay. I gotta make that thicker. Wait, what? It only makes the top lines bigger? That's stupid. The hell? Oh, that's stupid. Wow, well that's really dumb. Gotta do each one individually. We won't need that one. There we go. Alright. Yeah, you know what? Man, yeah, we're breaking 360 this week. Looking at the weekly, I'm going to say there's an 80% chance we're breaking 360 this week. Not at a minimum till like Wednesday. Wednesday, Thursday. 360 will get broken. Hey, stupid chart. See how they screw me like this? Like the chart freezes. This is from 3 hours ago. Alright, this is good here. Alright, let's put up a quick video here. I've been talking so much here. Man, I think this 3750 has a good shot at cracking later on. Again, I hope they jam it up sooner than later, past high day. Oh, here's a target too. Check this out. I had that from last night. This symmetrical triangle breakout. What was the target? 69.75. Look at that, 69.75. Stop doing that. Obviously, they went higher. No targets are 100% end of the move, but that's pretty sweet. Man, I forgot about that. I woke up late, so this. When I was getting my coffee, the market made the move here. In hindsight, if I would have remembered that, I probably would have went long at the open. I totally forgot about that. But I was in the bathroom here as the market opened, making my coffee here. So by the time I got back, we were already right here at the target. Yeah, you missed a good speech, 33, about an hour ago. I was talking for, I don't know, maybe a couple hours. Alright, where are we at here? So the trend is your friend. Maybe I'll grab a call. I don't know. Okay, so we're gonna cross on the 375 calls. That's only 1 minute, but regardless of the calls, we're definitely gonna make a run for high and day. I don't know if they're gonna do it right now, but I'd be surprised if we don't make a run and likely break high and day. So yeah, they're juiced up. The 76s are 80 cents. Maybe if you get them for 75 cents, that wouldn't be bad. You'd probably get a double out of that. Alright, let me get our video going here.
Good evening, all. Ira Epstein, and this is June 20th, Juneteenth, 2022, and I am back, all right? I'm not well. I wish I could tell you, hey, I'm over COVID. I'm not contagious anymore, according to the doctors. I'm in that week period where I have to wear a mask, basically stay away from people as much as I can. I'm over a hump. I'm weak, no question about it. I get up, I take naps. My voice is still very, very weak. I can talk for periods of time, then it sort of fades on me. But I'm over the hump, and I appreciate you putting up with it. Certainly wasn't intentional. I can only tell you, I've had 3 COVID shots. I got it. I doubt I'd be here. That's how ill I got without having those shots. I truly believe that, because I was this close from going to the hospital as it was. My wife was debating does she take me to the emergency room because I couldn't breathe. It hit my lungs unbelievably bad. Just moving would hurt you terribly. It's like somebody you were in a fist fight. But here I am. I can hit my lungs, and I'm back. All right. So let's talk about these markets, because it's interesting. One of the things we have to keep our eye on is the markets are coming down, and some of the numbers that I'm watching, if you go to the futures markets, you're approaching the 200-week moving average. You don't have to hit it. You're in a zone now where the market's near a major support area in everything but the Russell. The Russell is underneath it and has been for a while, so that is your weakest of the indices. As for the rest of the market, one of the things that we have to keep looking at is what are the PE ratios? How far has this market gotten back down to something that's more normal? We want to see something approaching 16 so that that's fully normal. We got up into the 30 level, and people go, that's the new norm. I've been around this 50 some odd years. There really aren't a lot of new norms. There's better ways of doing things, but markets seem to come back to the old school rules. And that is the beauty of trading. If you know those rules, you pay attention. Anything can stay out of the rules for a while. Anything. That's just the nature of a market. Markets change. They become electronic. They trade 24 hours. Everything changes. But at the end of the day, a moving average is a moving average. A stochastic's a stochastic. A price chart pattern's a pattern. This is how it works. When I look at stocks, which are the semiconductors, I'm still of the camp, look at how bearish this is. There's nothing really friendly on this chart. The pattern is lower highs, lower lows, which is still bearish. When we look at the moving averages, you're going to get another bearish crossover here, where the 18-week average is about to cross that green, the 100. And when it does, people will say, we had a bearish crossover in the market, and you could be going back to the 314 level. On the way up, because of those averages, that's a natural sell zone for traders if the market puts on a rally there. But you got to understand, that's a $70 rally. That's a heck of a rally. I have my doubts you're going that high right away. So what is the market saying? It's saying that these semiconductor chips obviously aren't as short supply as we're led to believe. Otherwise, they'd be being well bid. Conversely, maybe the products they go into, because we're, I think, in a full-fledged recession, the demand for those products isn't as big as it could be. There's a combination here, probably a little bit of this, a little bit of that. You're under the Bollinger Band. Would I ever tell a trader to be short under a Bollinger Band, especially adding a new position? It will never happen from me, as it won't happen with me ever telling you, hey, buy long over a band. No, you only stay over a band or under it 5% of the time. They build the casinos from inside this. The guys that are doing that are where we get the money to put up and buy the new land for the casino. Momentum, still pointing itself down. So trend down, bias down, but overdone. I'd like to see rallies because I think it's still in the short sale area. In KBE, the bank index, well, you're down into the 200-week average. You can slide through it, but the 200-week with the Bollinger Band is a zone where if you were next to me, I'd give you the elbow and I'd say, you've milked this market as much as you can at this point. Let's see if it does what it normally does and tries to bounce away from the 200-week average. That's what I'd be telling you. XLI, the industrial sector, same thing. Why not cover your shorts right against the 200-week in the lower band? If you were next to me and you were fortunate enough to be short, and it's been in a downtrend, it's a natural zone to cover this week. I think it's already done, fait accompli. I think the pros have covered a bunch of their shorts. Then in XLE, you just lost all your bullish momentum. This was an embedded reading that you lost, and you immediately went to the 18-week average. You cut under the last break low of 75.13, so you have a higher high, lower low, caught in this channel, but not in a trend of any type at this point. SPY, this is what I was showing you. Start paying attention to these 200-week averages. I'm not saying you're going there since you're under the Bollinger Band already, but if they wanted to get there, I'm very interested. GLD, this should be the support zone, 168.03. You have to clear this number on GLD, 177.43 to get friendly or no longer be bearish, might be a good word for it. Right now, the bears are still in full control, and this is a cover all short area in GLD. You're down to the 200-week, the lower band. You have broken back. While momentum's down, there's no edge. The edge is gone. If it falls, fine, but you'd be under the Bollinger Band. You only stay under it 5% of the time. Kathy Woods ARK, you made a new low for her move, 35.65. You can see how market is down here. Nah, still no sign that she's out of the woods in any way, shape, or form at this point. So, Apple. When we look at Apple, sorry about that, this Windows Defender came up. The market is fighting a battle right through here. So as I'm looking at the markets, just to put it mildly, I think we'll leave it right here, by the way. I'm looking at what the markets are doing. I think you're in a short covering area. I expect to see more of that this week. I thank you for putting up with me not being able to do the updates while I was trying to get them done due to my COVID. I'm past that bad hump. I'm able to talk, not for lengthy periods. This is 6-7 minutes. 20 minutes is still hard, but I do it by hitting pause in the morning subscriber updates. I'm Ira Epstein. I'll see you tomorrow with a much lengthier one of these. Take care.
The Sierra Nevadas in California, 10,000 feet above sea level. In the winter, temperatures drop to 40 below zero. In the summer, the place bakes in the thin mountain air. In this unlikely spot, the town of Bodie sprang up. In its day, Bodie was filled with prostitutes, drunkards, and gamblers, part of the colorful history of the American West.
A century ago, this was a town of 10,000 people. What brought them here? Gold. If this were real gold, people would be scrambling for it. A series of gold strikes throughout the West brought people from all over the world, all kinds of people. They came here for one purpose and one purpose only, to strike it rich, quick. But in the process, they built towns, cities, in places where nobody would otherwise have dreamed of building a city. Gold built these cities, and when the gold was exhausted, the cities collapsed and became ghost towns. Many of the people who came here ended up the way they began, broke and unhappy, but a few struck it rich. For them, gold was real wealth, but was it for the world as a whole? People couldn't eat the gold, they couldn't wear the gold, they couldn't live in houses made of gold. Because there was more gold, they had to pay a little more gold to buy goods and services. The prices of things in terms of gold went up. At tremendous cost, at sacrifice of lives, people dug gold out of the bowels of the earth. What happened to that gold? Eventually, at long last, it was transported to distant places, only to be buried again under the ground. This time, in the vaults of banks throughout the world.
There's hardly anything that hasn't been used for money. Rock salt in Ethiopia, brass rings in West Africa, cowrie shells in Uganda. Even a toy cannon, anything can be used as money. Crocodile money in Malaysia. Absurd, isn't it? That beleaguered minority of the population that still smokes may recognize this stuff as the raw material from which their cigarettes are made. But in the early days of the colonies, long before the United States was established, this was money. It was a common money of Virginia, Maryland, and the Carolinas. It was used for all sorts of things. The legislature voted that it could be used legally to pay taxes. It was used to buy food, clothing, and housing. Indeed, one of the most interesting sights was to see the husky young fellows at that time lug 100 pounds of it down to the docks to pay the costs of the passage of the beauteous young ladies who had come over from England to be their brides. Now, you know how money is. There's a tendency for it to grow, for more and more of it to be produced, and that's what happened with this tobacco. As more tobacco was produced, there was more money, and as always when there's more money, prices went up, inflation. Indeed, at the very end of the process, prices were 40 times as high in terms of tobacco as they had been at the beginning of the process. And as always when inflation occurs, people complained. And as always, the legislature tried to do something. And as always, to very little avail. They prohibited certain classes of people from growing tobacco. They tried to reduce the total amount of tobacco grown. They required people to destroy part of their tobacco, but it did no good. Finally, many people took it into their own hands and they went around destroying other people's tobacco fields. That was too much. And they passed a law making it a capital offense, punishable by death, to destroy somebody else's tobacco. Gresham's law, one of the oldest laws in economics, was well illustrated. That law says that cheap money drives out dear money, and so it was with tobacco. Anybody who had a debt to pay, of course, tried to pay it in the worst quality of tobacco he had. He saved the good tobacco to sell overseas for hard money. The result was that bad money drove out good money. Finally, almost a century after they had started using tobacco as money, they established warehouses in which tobacco was deposited in barrels certified by an inspector according to his views as to its quality and quantity. And they issued warehouse certificates, which people gave from one to another to pay for the bills that they accumulated. These pieces of green printed paper are today's counterparts of those tobacco certificates, except that they bear no relation to any commodity. The fact is that most people enjoy the early stages of the inflationary process. Britain, in the swinging 60s, there was plenty of money around, business was brisk, jobs were plentiful, and prices had not yet taken off. Everybody seemed happy at first. But by the early 70s, as the good times rolled along, prices started to rise more and more rapidly. Soon, some of these people were going to lose their jobs. We have got it made. The party was coming to an end. Sha-la-la-la-la-la-la-la. We're on top of the world. Sha-la-la. The story is much the same in the United States, only the process started a little later. We've had one inflationary party after another, yet we still can't seem to avoid them. How come? Before every election, our representatives would like to make us think we're getting a tax break. And they're able to do it while at the same time actually raising our taxes because of a bit of magic they have in their kit bag. That magic is inflation. They reduce the tax rates, but the taxes we have to pay go up because we are automatically shoved into higher brackets by the effect of inflation. A neat trick. Taxation without representation.
The more I work, it seems like the more they take off of me. I know if I work an extra day or 2 extra days, what they take in federal income tax alone is almost doubled because apparently it puts you in a higher income tax bracket and it takes more off you.
Bob Crawford lives with his wife and 3 children in a suburb of Pittsburgh. They're a fairly average American family.
Don't slam the door, Daphne.
Okay. All right.
What are you doing?
Making your favorite dish.
No.
We went to the Crawfords' home after he'd spent a couple of days working out his federal and state income taxes for the year. For our benefit, he tried to estimate all the other taxes he had paid as well. In the end, though, he didn't discover much that will surprise anybody.
Inflation is going up. Everything's getting more expensive. No matter what you do, as soon as you walk out of the house, everything's going up. Your gas bills keep going up, electric bills, your gasoline. You could name 1,000 things that are going up, but just everything's going sky high. Your food. My wife goes to the grocery store. We used to live on, say, $60 or $50 every 2 weeks just for our basic food. Now it's $80 or $90 every 2 weeks. Things are just, they're going out of sight as far as expense to live on. Like I say, it's getting tough, and it seems like every month it gets worse and worse, and I don't know where it's going to end. At the end of the day, I've spent nearly $6,000 of my earnings on taxes. That leaves me with a total of $12,000 to live on. That might seem like a lot of money, but 5, 6 years ago, I was earning $12,000.
How does taxation without representation really affect how much the Crawford family has left to spend after it's paid its income taxes? Well, in 1972, Bob Crawford earned $12,000. Some of that income was not subject to income tax. After paying income tax on the rest, he had this much left to spend. 6 years later, he was earning $18,000 a year. By 1978, the amount free from tax was larger, but he was now in a higher tax bracket, so his taxes went up by a larger percentage than his income. However, those dollars weren't worth anything like as much. Even his wages, let alone his income after taxes, hadn't kept up with inflation. His buying power was lower than before. That is taxation without representation in practice.
We had a number of you brothers that are sitting here today that were with us on that committee, and I'd like to tell you one of the things...
There are many traditional scapegoats blamed for inflation. How often have you heard inflation blamed on labor unions for pushing up wages? Workers, of course, don't agree.
But fellas, this is not true. This is a subterfuge. This is a myth. Your wage rates are not creating inflation.
And he's right. Higher wages are mostly a result of inflation rather than a cause of it.
Economists in this country...
Indeed, the impression that unions cause inflation arises partly because union wages are slow to react to inflation. And then there's pressure to catch up.
On a day-to-day basis, trying to represent our own members. But that, in fact, is not the case. Not only can we not play catch-up, we can't even maintain a wage rate commensurate with the cost of living that's going up in this country.
The reason we have inflation in the United States, or for that matter anywhere in the world, is because these pieces of paper and the accompanying book entries, or their counterparts in other nations, are growing more rapidly than the quantity of goods and services produced. The truth is, inflation is made in one place and one place only, here in Washington. This is the only place where there are presses like this that turn out these pieces of paper we call money. This is a place where the power resides to determine how rapidly the amount of money shall increase. What happened to all that noise? That's what would happen to inflation if we stopped letting the amount of money grow so rapidly. This is not a new idea. It's not a new cure. It's not a new problem. It's happened over and over again in history. Sometimes inflation has been cured this way on purpose. Sometimes it's happened by accident. During the Civil War, the North, late in the Civil War, overran the place in the South where the printing presses were setting up, where the pieces of paper were being turned out. Prior to that point, the South had had a very rapid inflation. If my memory serves me right, something like 4% a month. It took the Confederacy something over 2 weeks to find a new place where they could set up their printing presses and start them going again. During that 2-week period, inflation came to a halt. After the 2-week period, when the presses started running again, inflation started up again. It's that clear, that straightforward.
from North Carolina, Mr. Murphy, to
Thank you,
inquire.
Mr. Chairman. Thank you, Madam Secretary. You understand, I'm sure, that this is Congress. This is the people's house. We go back to our districts and we actually talk to the people who are at the pump, buying gas in the grocery store, as opposed to President Biden, who's been in D.C. for 50 years. There's been a common theme that throughout his presidency of so many self-inflicted crises that he is tone deaf to what's going on to the American people. And I will point out two things that have been a little bit fallacious in the discussions here today. We talk about the job growth and everything. The unemployment rate prior to the epidemic in the Trump administration was the lowest it had been. During this pandemic, we fired people for not getting vaccinated. People came out of their jobs. All that's happening is people returning to jobs. We also know that during the Great Resignation, many people eliminated themselves from the workforce. So on one hand, people want to blame the pandemic for what's going on today, and other people want to take credit for what's going on today. We know for a fact that since Biden took office, the inflationary rate in this country rose. It was 7.9% the day prior to the Russian invasion. So to blame fuel prices and everything on the invasion of the Russian dictator is absolutely incorrect. So I would ask you this: how then, in the face of today's skyrocketing inflation, which we all agree is a regressive tax, where we see fuel prices going through the roof, we're about to see food prices double, how can you say and justify that adding $4 trillion in taxes are good for the American people and the inflation that the average American, which Biden just doesn't understand, how can it be good for the average American?
Well, especially given that gas prices, which are related to global oil prices, which we have only modest control over, can put in place some policies to affect it, but it is a global market, and high food prices, which are also being affected by
but how can these taxes, how can these $4 trillion in taxes help the American people?
First of all, they will enable deficit reduction, which will complement the Federal Reserve's tighter monetary policy. And second of all, they'll enable the financing of government programs that will help to bring down.
So as we tax people, we take more of their money away from them when they have less discretionary spending now because their real wages have actually decreased.
Those proposed tax increases won't mean not a penny more spent on taxes by any household making $400,000 or less.
That's a lot of people.
Entirely on very high-income individuals and corporations that also should be paying their fair share.
I understand. Thank you. Let me just finish up with one other question, because corporations are mom-and-pop businesses. They're people with sandwich shops. They're people that run their own grocery stores. Let me follow one thing. The Biden administration now wants to try to plan to cancel so much of student debt, up to $1.3 trillion in student debt. This is, again, another regressive tax initiative because most of the individuals who would benefit from that are higher income earners. It's well documented, and Mr. Chairman, I'd like to submit for the record one particular document that canceling student debt will add to inflation. Do you believe that's a good idea?
So ordered. Without objection, it is included in the record.
No decisions have been made about student debt.
Do you agree that it would add to the inflationary pressures of the country today?
It depends on how it's done.
I'm going to proceed now to conclude with
Depends on how it's done. So where's that debt just magically going to go to? All right, still inconclusive here. Right now, the 15-minute posture is not ready for the upside, and it's not really ideal for the downside. So we sit on our hands. Oh, man. The January 6th hearings. Who the hell's watching that crap? Yep, that's the system stacked against men. All by design. Women nowadays, the juice ain't worth the squeeze. They are. It's men to blame. Men have the real power. They just give it away. Just for a few minutes of gratification. It's not worth it. I've seen it firsthand. I had a ex-best friend who was completely and has been whipped by his wife the whole entire time, like an idiot. Yeah, those Eastern European women aren't not quite what they used to be either. A lot of that Western propaganda has infiltrated the last few remaining good countries as fine women. I'm glad I'm a man. I have plenty of hobbies to keep me entertained. That's man's biggest downfall, is women. It is the U.S. It's all the feminist propaganda. Yeah, remember the inflation video with Milton Friedman that I played? The propaganda and the lie sold the women to be independent and working, when the fact of the matter is women have to work now. 2 incomes are needed to survive what one income provided 50 years ago. So all the dumbasses out there, men and women, falling for that crap. No woman wants to go work. The average woman, she wants to stay home and raise her kids. Kids make women happy. Oh man, another crappy day. Well, yeah, they can do hard work, but just not out of their traditional roles. That's why households are so messed up nowadays. Yeah, so today's move out of the open, um, even if I would have caught that symmetrical triangle target, I probably wouldn't have taken the trade. Um, even if I was there and I recognized it. But this was the move for the day right here. Right here. So that was the move. You know, you had to get it at the open. And it worked out nice because if you went long and never looked back. I mean, obviously that's a move. You know, I'm looking for. I like. I'm not gonna say congrats to anything involving marriage. I hope it works out. That's all I gotta say. Because that's how she is right now. But I had another good friend that not long ago got divorced. And by the way, divorces, it's like 75 to 80% of divorces are initiated by the wife. So she divorced him, and I was actually a little surprised because they're kind of a good match. But if you're not better looking than your wife or girl or whatever, she's never going to truly desire you. It's just the way it is. So if you sweat your girl just a little bit, it's not going to work. Especially if it's a wife, something permanent, and you gotta edge her out a little in the looks. So if your wife's a 6, you better be a 7. Otherwise, there's a high probability it's going to cause trouble later on. Alright, this 15-minute needs to firm up here. So it may happen quickly. I'm not saying on this camera, but I'm waiting for this next 15-minute to close to get in. So far, those 75s for 75 cents were the trade. But it's still really, the Bulls have the edge, but it's still a little shaky here because I don't know if they're going to do a rug pull and then rip it higher. So, you know what I said earlier about waiting for the ideal setup here, you got to be a little careful here. So, as far as the chart goes, this was satisfied here on this pullback, and I don't know if they're going to do another rug pull though. They very well might. Tough to say. Yeah, I know, running hot. You're right. When the computer fans kick on, you know, usually stuff is moving. Yeah, but it works both ways too, because you may have more power later on in life, but you also don't have the raging hormones that you did when you were younger. So when you were younger, when you're 18, 19, 20, and you just wanted to, every good-looking girl you see, you wanted, you couldn't get her. The older you get, your drive goes down, and you know, it works both ways. It all boils down to looks. It's all genetics. It's all genetics. Maybe the Ukrainian girls from Ukraine for the money, and especially now with Ukraine the way it is. What you have to understand is that that's not going to last forever. If a girl doesn't truly desire you based on who you are, just as you are, that's never going to work out in the long run. There has to be genuine desire. And that genuine desire comes from how much a person is attracted to you. So you can have all the money you want. They actually did an experiment. This was from like 20 years ago or something, on like Dateline or something. They had different guys lined up, and they asked the girls, okay, who would you pick? This guy makes this money, this guy, blah, blah. One of the guys was like 5'4". He's like 5'4", which is short, okay, but it's not like he's a midget, okay. And they said, okay, he makes 100, or this is over 20 years ago. They're like, he makes over $100,000 a year. They're like, no. They're like, okay, he makes $250,000 a year. They're like, no. They're like, oh, he's a doctor, $1 million-year doctor with a Nobel Prize. And they still said no. So like, no matter what attributes they gave to the guy, him being 5'4", it didn't matter what. He could have been a billionaire, the richest man in the world, and they're still not going to desire him. Yeah, you gotta put your foot down, but in order to put your foot down, you have to have a leg to stand on. So that's what I said before. If you're sweating the girl you're with, it's over. It's a wrap. You have to have some kind of leverage over her, and that's going to come from you being at a minimum slightly better looking than her. It's just very simple logic. Because then it boils down to if she likes you as a person. If you don't have that edge over her, she can replace you like that with 1,000 other guys with your looks level. It's all looks, trust me. It's all looks. It's all looks. The money, the this, the that, stability. Trust me, I've been with girls, that I could do no wrong. Like in the past, I've been with girls that were just a hookup or whatever. I didn't care about, and I probably did it more than once, but like the first time hooking up and hanging out with the girl, like I've done stuff like blow farts and stuff like that, and they could care less. It didn't change anything because like I didn't care. She was just whatever, just an average girl that I didn't care about. So I really could care less. So even blowing some farts on the first date didn't matter. it still ended in his success. So the point is, if you're a good-looking man in the woman's eyes, you could do no wrong, just like a woman. So every simp out there that worships, whatever girl, even if he's not bad-looking himself, but she's hot or whatever, well, she could do whatever, and he's not going to leave. It'd be like if you had a job, if you work somewhere, and you're very valuable to the company, like they absolutely needed you in that position. Well, then you could do no wrong. You can do whatever you want. They're not going to fire you. What are they going to do? Who are they going to replace you with? So it's simple supply and demand. No, it's not about charisma. And when you're with your wife, that shows pre-selection. So especially if your wife is, decent on a whatever level of good looking, it's pre-selection. So if she likes him, well, there must be something to him. And women love drama. So, and they love the competition of trying to steal someone's man. So either you're good looking or what I just described. It's not about your charisma when you're with your wife. You just said it right there, while I'm with my wife. So you have X amount of level of looks, which you must have if you have a wife. And then they see you with the wife. Jealousy, all that comes into play here. Oh, here we go here. What do we got here? Those 375 puts are waking up there. This is still nothing here. Still nothing. See, that 15-minute is it's tough right now. So because it's tough, you don't want to do anything, because the 15-minute needs 5 more minutes to close. The 15 minutes not showing direction here. This stupid chart. I hate when they do this shit. So yeah, right now this is nothing. Oh wow, here's that this kind of symmetrical triangle. So there is potential for a big pullback here. Yeah, people want stuff they can't have. So there you go with the wedding ring. Yeah, see, look at this. Is just, don't get sucked in here. Remember my speech. Remember my speech earlier. The 15-minute is indecisive right now. Right here, this 15-minute has not closed. This is not a look. This look is to the upside. Actually, speaking of the upside, that might actually be. Wait, these 375s? Could have gone for under 75 cents. Damn it! Shit, that was a good. That was the buy right there. All right, the 15 minutes not done yet here, but those 375 calls. Let me look at it. This is a 1 minute here. Damn it! That was the trade right there. I mean, that's a spike. You had to kind of roll the dice there. But right now, the 375s for 87 cents. I might be thinking about that. I might be thinking about that. 375 calls. It's tricky right now. You got to wait for this 15 minute to close. Right now, we have a few more minutes here. And you don't want to be rushing in here. Because right now, the bulls have the edge here, even with this not closed yet. You can see some shenanigans here. I think they're going to make a run for, maybe 376.75 or something like that. Maybe 377. I don't know about that. But this hourly here is interesting. This is interesting. Whatever they do to the upside, it's not going to hold. I'll say that much. Whatever they do to the upside, this posture here says it's probably not going to hold. Oh, that's interesting. We got that right there. Ooh, that's very interesting. Yeah, there's your target right here. This big fat. Where is this from? Number 6. Oh, it's this. From the all-time highs. Interesting. Right here. From the all-time highs. Right here. So the target is 37. Let's just say 37.87. 37.87 is the target. Maybe 90. 37.90. So another 20 handles. 37.87 to 90 is target. It's 15 minute. You're going to be able to get in on the dip on the next candle here. So the 15 minutes setting up nicely. Ooh, I'm kind of. I have a feeling they're going to just pop it. Man, I'm not paying $1 for those 75s. Man, they already dipped to try to run that 87. That low was 88. Damn it. This might be it. Shit. So this I think I'm going to buy the dip once this 15 minute closes. Yeah, we're pretty extended here. So wherever they go, I'm buying the dip. The 15 minute, as long as it doesn't flush here, is going to close nicely to support the move higher. Man, you're on the laptop? I know you could plug in a mouse, but I hate those trackpads. Well, trading on it, constantly moving around, and you're essentially playing a game with it, with manipulating the charts. You need a mouse plugged into that. Okay, so the 15 minute closed good here. You may be able. I think the trade might be waiting for this 15 minute to close and buying the 76s on the dip of the next 15 minute. You know what? The 75s are a safer bet here. Let's see what happens here. Damn, that was a dip right there to 90. There's still no reason to rush into the trade here. Yeah, I think they're going to go relatively soon to test this. They should still let you in. So after this next 15 minute closing, buying the 76s on a dip might be nice. Let's see these 75s. Oh man, I'm tempted to get these 75s under $1 here. Let's see, I gotta look at more charts here. I haven't really looked at it. See, I'm wondering if the better trade is the short, because I don't think they're going to hold it into the close. So wherever they go to the upside, I think they're going to, you're going to get a good pullback off this move to the, whatever, 77 maybe. I don't even think they hit 77. I think we see like 76, 50, 75. I don't even think they hit 77. See, because that's why I didn't get those 75 calls. Because if we hit 76.5, you know, a double would be 70 from 75 cents. Yeah, it's a little indecisive here. See, this is what I mean by I'm tempted to get in because this is probably going to work out. But how well will it work out is the question. You know, it's a big stretch that they hit 77. I think that's a stretch that they hit 77. So those 75s for, you know, let's just say 90 cents. I mean, yeah, it'd be double, so it's nice, but the chart is also a little shaky here. You know, the bulls have the edge, but I'm not crazy about the posture. Because, you know, you still have that pivot to break, you have high day to break. So that's why I'm going to wait for them to make the move, and then I could get the 76s on a dip, hopefully for maybe like a quarter. Because this 30-minute is pretty shaky. Again, it doesn't mean they have to break 74, but with that 20, and then just this posture here is just kind of strange. But the MACD posture is not saying that, you know, they're going to pull the rug and hold. You know, we're not going to get some big rug pull. That's what MACD's. We could. I mean, anything obviously is always possible, but I think if we come back, we're going to come back from a higher price. So they're going to, you know, higher before lower. That's kind of what the chart is telling me as of right now. So this is getting bid up into the close. This is kind of supportive of the market breaking that 360 this week. If this could try to make a run for that 35, an attempt. Yeah, I think they spike it up and then fade it. So I think if they spike it up, you know, they could break 74 possibly on a move higher and then flush it under 74. So if they push to new high day, I'll be looking at those 76s for like 50 cents. That would be great. 76 puts for 50 cents. That would be a good price if it plays out how I just said. See, the thing is, there's not much time left. But if they make the so, you know, breaking 74 is a little bit of a stretch. But trying to make an attempt at 77 and then coming back into all this, we'll see how it plays out here. It's higher before lower is playing out for now. Yeah, it looks like they're gonna make a run for it. See, waiting for that next 15-minute. Are they gonna just pop it? That would suck. Because then that 375 call play would be the play. They might just make a run for it right here, right through everything. It's looking like it. But that's good. Because the move, the pullback will likely be better. Alright, so that's the target. 76.55. Especially if they get there sooner than later. The 76 puts right now are 70 cents. So realistically, those 76 puts for like a quarter. That's going to be the trade there. The 76 puts for a quarter. No, I don't think it's going to hold. I think they get there, but we're going to come back. Especially if they get there in relatively short order. The 76 calls for 50. I don't think it's going to come back there, but yeah, that's not a good trade because yeah, the trade was the 75s before this move. If you're going to get in anything, I'd get in the 75 calls on a dip here, back down to maybe this 60. All right, I'll be back. I'm gonna go get my water. Alright, so they didn't let you in. Before I left, I was saying on the next 15 minute, which started here, they got too far away. So this 15 minute that started here, if we were here, hopefully you could have got the dip. They didn't let you in a nice way, waiting for the 15-minute confirmation. So let's see what happens here. So the 376s are 50 cents, so that's too expensive. Way too expensive. That's actually very expensive. 55 cents? No way. It'd be a double all the way down here. So I don't think this is going to sustain the move into the close. What kind of tells me that too is the 1 minute MACD. I mean, obviously it could. Anything is always possible, but it looks unlikely that wherever they go beyond this is going to hold. And I don't mean they're going to rug pull 375. I'm just saying I don't think this holds into the close, or at least on this current push. But those 375 calls, that was the trade right there. I almost snagged them at 75 cents. The first run they hit 76 cents. On that washout, they hit 68 cents. I almost grabbed them under $1, but I wasn't liking, this had to happen for it to work out nicely, and it did. So, but like I said in my speech earlier, I'm looking for A+ setups. So it looks like they'll probably hit 75 on this next push here. I don't know about 77. Yeah, if anything, they come short of 77, maybe 76.90. But I think that's a little bit of a stretch, even though that's not that far, just based on the posture of the chart. You did. This is going to be an interesting close here. Oh wow, the chart's, oh no, it's not working. They updated the chart up to 145. It was like here all day. Anybody have any idea? Well, I mean, other than them doing this on purpose to not give you both angles, but any idea why they would freeze the inverse chart? So all day, the inverse chart was up until this point right here, about 9 o'clock. And now it just updated. But we're only at 145 here on the new updated chart. I mean, that's just ridiculous. Why would this even happen? Let's see if Apple does it. I don't know if I had problems with Apple. So Apple, speaking of Apple, it looks like, well, Apple and SPY. See, Apple's giving me real-time data on the inverse. It's looking like this is going to reverse. On the Apple chart, they're going to push a little higher here, but not much. See, this chart's frozen at noon right here. It hasn't changed on the 1 minute works. So yeah, I think we're going to get some kind of a, possibly a V bottom. Let's see, these 76s, maybe 30 cents. I think I'll grab one. Not right now, but the 76 puts here, if I could get them for 30 cents, I'll grab one. But sure as hell I'm not paying 50 cents. So my target was 76.55. They came a couple pennies short. I'm hoping they push higher though. The higher the better. This is some weak volume here today. I mean, look at the volume. You had your opening, you know, like capitulation in the volume, you could say, with a big gap. And then just look at this volume here. So on that move higher, it immediately dropped off on the next couple candles, big time. Alright, this is good. One more push. One more push. Alright, I got a bid in at 30 cents on the 76s in case they flush it. I'll be happy at 30 cents. Just one. First trade of the day for 30 bucks. I don't think it'll hit 30 cents though. The low is 44 on these 76 puts. But I sure am not paying 50 cents. That's for sure. If it doesn't work, it doesn't work. I don't care. I'm not paying 50 cents. Yeah, the 30-minute is saying, well, it's inconclusive right now, but they could still spike and push higher on the next 30-minute, and then maybe off of that high, reverse to, you know, who knows, 75, I don't know. I don't think it happens, but it would be really sweet if we hit 74 to the close. I don't know if they do that, but That would be a sick trade. That'd be, almost a 7-bagger on these 76s if I get him at 30. Definitely not counting on that happening, but a dump under this pivot here into the close could happen. Let's see my target. I hope that's not it. I'll be pissed. Because they might pull the rug a little bit here. I would be pissed. Getting greedy. Well, I don't want to say getting greedy, but my target was 56, I think. Right here. Let's see my target. I think it was 56. And I don't know how exact this target it was, and not that it matters, but they should push it up one more time. Yeah, 56 was my target. Or maybe they squeeze it to 78. No, I don't think that's going to happen, but you never know in this market. Right now, see the volume, how it picked up here on this chop? This is telling me, they're selling it to the people buying the dip. Let's pick up in volume on this chop here. I still think they could push it one more time. Because if they don't push it again, I'm not comfortable buying the dip. Not comfortable buying that dip at all into the close. Fearing that they flush this pivot into the close on some bounce attempt. I'm pretty skeptical about that. Maybe the 74.50. A little bit of a stretch right now, but I'm not trusting buying a dip. Now buying a dip here, I would be more, not that it's a good setup, but it'd be safer buying here than if we come back here. You could get a bounce here, but I think if they come back here, it's the high days, it's done for the day. You get whatever bounce, but they're not gonna come here and then take it back up. So I see here, they're gonna do it now. So this is good. The sooner the better. I really want to see them bouncing on this candle. We got 9 minutes left. Spike the high a little bit, maybe put in a doji, and then begin to roll over into the close. Realistically, 75.50. Maybe break 75.50 to the close realistically. Yeah, that's a realistic pullback, 75.50 if they go back, But the setup is them breaking high day, going a little bit further first, and then at a minimum, breaking 76 on the pullback after that. But right now, we're just kind of flagging out, consolidating here. Because this 20 will be where it never close. maybe 75, 80. Oh, look, they fixed the chart. Yay. They gave us the chart into the close. So spike a high day on the next 5 minute would be nice. On this next candle, a flush and then a recovery off the high day break. That's what I want to see for the move under 75.50 into the close. Possibly making a run for 75. That's my short setup. So yeah, what I just described there kind of has to play out that way on this next 5 minute. And then off that high day pullback, this 15 minute really needs to close as close to or under 76 on this 15 minute close. You know, maybe at best they hit VWAP into the close or after the close. I mean, they already hit VWAP enough times, so. But if we do pull back and they break that 75 and a quarter to 75 area, then VWAP might get there. But right now, that's a stretch. We're only talking a point here, as crazy as it may sound. So yeah, this is the candle right here. Right here in this candle, I want them to flush high day. It's not what I wanted. That was the candle that needed to do it. This 35-cent 1 minute candle is not what I wanted. Oh, come on. Alright, I gotta cancel my order here. Later on, I might get filled at 30 cents. Damn it. What was the low there on that last one? So yeah, 50 cents. I already said I was not paying 50 cents for those. I'm not looking for a 3-bagger here, but 50 cents was pretty steep. Let's see how this plays out. So we have, alright, I'm just going to do this for now. It's going to be sloppy, but I'm curious. Alright, so these are all far away from now. Alright, there we go. Let's see how this one plays out here. So 75 run into the close. So we'll see how this reacts to this resistance line from last week, Thursday. It rode it on Friday. Let's see what happens here. Could they do it on the next 5-minute candle flush. I mean, they don't have to break high day. I'm just a little skeptical about the downside without an attempt. One more attempt at high day. I mean, even though it came 4 cents short of my target, I'm a little skeptical when stuff like that happens. You know, they did spike 50, so they did that. Now it looks unlikely they spike high day if they're going to continue lower. So what do you guys think? Let me reverse it. Is this a dip to buy? Are we going to push higher into the close? Are we going to make a new high day into the close? Or are they going to make a run for 75? What do you guys think? I don't know. I think it's right now. I think it's a coin toss. I think there's a chance they spike or crack high day. But I don't think it holds. I don't think it holds. And I hope they do it on this 15-minute. Because right now this 15-minute posture, if they spike high day on this 15-minute, it's supportive of them coming back down, you know, at least to 75.50. Boy, it is making a bull flag, but there's a lot of other stuff on the chart. So again, I'm not talking a huge dump into the close. We're talking a 1-point pullback here. Because right now this hourly is not saying they're coming down hard or anything like that. The 30 minutes a little sketchy. It's just a tired look. You know, the 20 all the way down here, the 50 flattening. And the daily and the weekly are still fully bearish. I think we gap down tomorrow. That's my guess. Not saying a big gap, I'm just saying I think we gap down tomorrow. Because we're going to need the gap down to kind of keep the bearish posture on the daily, 4-hour, and hourly. Just to keep that 360 flush in play. If that's what happens. But I'm still believing the 360 gets flushed this week. See, the problem too is right here. Most of the time, when you exit the power zone, more often than not, this is a bearish sign. And I'm not saying just because it's crossed. I'm saying, you know, they obviously could, you know, turn this up here. They very well could. But normally when there's strength, it stays up here. And if it comes down, it quickly comes back up. We're not really in that situation where not really a setup for that. This kicked off a move here, so it's not really quite applicable to this. But regardless, when you see it get under this line here, you know, you're hoping this holds together and continues another move. You're hoping right here. Right now, this is neutral. This is 100% neutral right here. You do have the hourly, you do have other stuff that is bullish for the intraday. But like I was saying before, if I caught this move, I would be selling on this candle. After this candle formed, I would be looking to get out on this candle. Okay, the move's over. So you caught the move, bam, there's your move. So staying in here, especially full position, or really any part of the position, right now this is a new trade. So right now, you'd be looking at the chart as it is. Should I be getting in long here? It's a whole new trade. You know, you're hoping it holds, and you're hoping we get another push as it stands right now. You don't know that. There's no way to know that. I mean, we can look at the 1 minute to get a better idea. So right now the 1 minute's looking good for a push. 5 minutes not there. The 1 minute's looking good so far. You know, this is a good posture here for at least to make an attempt at the high day. You know, maybe they crack the 40. At least an attempt up here. You know, you got this too right here. They already kind of hit this here, a back test. So this was already back tested. They're fighting this. But right now the bulls are hanging by a thread right here. This cannot close red. This needs follow through right here. This cannot do this. If this happens, they're gonna break this pivot here. So yeah, see that? There you go. Yeah, I know. So right now shit, this kills it. Right here is where I wanted them to spike it. I was gonna short a move here, and there you go. So there's my 376 puts for 50 cents. That yeah, see now they're only 76. See what I mean? So yeah, they could go lower, but now those 376 puts for 50 cents are 70 cents. So yeah, it's working right now. Maybe it continues to work, but that's why I didn't want to take the trade, because that was a high price for those. Now, do they hold this together? I said it before. I was skeptical about buying the dip here. If this Stoke turns up, if we get a cross back up here, then I may consider buying a move into the close. Having said that, I'm going to go get my food here. I'll be back. All right, boys, load them up. They're jamming it into the close. No, I'm kidding. No matter what happens today, today was a win. Because it was a win for patience. I might get a 375 on the dip. It looks like they may make a run for high day here. We're very inconclusive right now, so there's no reason to do anything right now. But yeah, see, this is still a very ugly look right here. See what I was talking about with this 5-minute posture earlier? Once you get out of the power zone, look what happened. Here I was talking about you're hoping this continues and makes another push higher. The move is over here. You don't know if there's another leg coming. The chart's saying it's not telling you there's another move coming. The chart's telling you right now we're pulling back here and you don't know what's going to happen. You know, they may even flush here. I've been very skeptical about where they're going to push it. And it's looking like they're gunning 75 here. Yep, there you go. There you go. How about those 76s now? Still not a double. Look at that shit. They're 80 cents. I was going to get them at 50 cents. I mean, if they hit, you know, they're going to double soon. So there's your double on the 76s. But look at all this stuff you had to go through and sit through and up and down and sweating it and all that. You know, so no matter what, today's a win in my book for the fact that I was as patient as I was all day. You know, this is going to be the first time, I don't even know, maybe ever, that I haven't put on a trade all day. Like even just one for 50 cents, you know. Okay, so this isn't bad right here. I'm going to be looking at the 374s for maybe 50 cents. I don't think that's going to happen. But okay, I thought they were going to break a little bit more. So there's the 375 run. You know, earlier I laid out at a minimum 75.50 gets cracked, which they did, and here it's even work out even more. So it's unfortunate they didn't spike it higher, because I would have been in those 375s or 76s, I mean, for 30 cents or so. I'd be sitting on a 3-bagger right now if that would have happened like I was laying it out right up here. So that kind of sucks. Now this is tricky too. If you're going to play this trade here, they're not going to bounce it hard. This 1-minute posture, they're not going to bounce this. They're not going to reverse this tape on the 1 minute. So if you're going to play bounce, get out on a spike. They may flush here. So let's see. I'm going to put in a bid on the 74s for 50 cents. Just one here. So if they flush it and hit me, I'm going to sell it very quickly. Alright, so I'm bidding 50 cents on the 74s. Just one. Very safe trade here. But this posture is telling me they're probably going to spike. And then you get out on that spike. Well, doesn't that suck? Those 76s are rocking. If I would have got that 30 cent entry, I'd be sitting on a 4-bagger right now. So let's see if I get in that 50 cents. Where's 75? 75 is here. 75 is 2 candles back on the high. They're going lower. So it's got to bounce up here for a double if we hit 50 cents. Come on, flush it a little bit more. They're going to flush it on the next candle. I wouldn't be surprised if they even flushed VWAP. We're a little extended on the 1 minute MAs, but what was the low on those 74s? 72. They hit over $1 so far. But again, if that's what the market gives you, that's what the market gives you. It's as simple as that. Well, there you go. Made it to the bell without one order, one trade. They're gonna break that low. Watch. Flush it. Flush it. Fill me at 50. Fill me at 50. Come on. Push it. The low was 68 so far. Being very conservative here because this is not a ideal trade here. And I'm almost tempted to grab a put here. See ya. One more spike would be nice. I mean, there's no time left here. I was hoping they did it on the last candle or this one, which they did. But this is still, so I probably shouldn't even be taking any trade, even if they do hit it, because this look right here, this was your chance right here into the close. This bounce right here was this, let's say 5 handles, if that. That was the move right here. So yeah, it is a win in my book that I went all day without taking a trade. But that's trading for you because we only have 4 days this week. So now it's really 3 days for me. There we go. They're going to do it. Man, that sucks that those 76s. I was looking for them to hit my target and then possibly make a run for 75 to get in those 76 puts. That's a shame because they peaked at $1.40. So if I would have got them on that high day break, that would have been a nice 3-bagger. Yeah, that is it. I think they still go lower. I'm gonna change my bid to 40 cents from 50, just because the trade was the spike and the bounce. That was the trade. So now if they flush, it's not going to be quite as good of a bounce off of that. So I want to get in at a better price. Man, I almost pulled the trigger right here on the 75 calls for like 75 cents. I almost did, but I did the right thing. I'm like, even before the murder algo, I was going to get in for 75 cents. But look at that. I mean, you got paid right there, but you had to have your order in there. But even here, I was tempted to. But here's your answer. The 9 never even crossed. And look what happened. You paid for it. So even if they did push here with the 9 crossing, they're not going to just keep charging up. It's very unlikely. They flag out, pull back, you're going to get in. So that's what made me not get in the trade there. And good thing I didn't. See, I was looking at it from the long side. Now let's look here. What did this look like after murder algo? See, here you go. This isn't a great trade here. It doesn't look phenomenal, but this is essentially a dip here. The murder algo was a dip. So looking at the reverse chart, which I wasn't, this sure looked a lot better to the downside than the 1 minute did to the upside. Let's see, shoulda, coulda, woulda, woulda. What could I got those 75s for? Wow, that sucks. If I would have got it on that 55 candle, I could have got these for a dime. They hit 40 cents. Well, that sucks. Alright, that's a wrap. I'm pulling my bid. Hopefully tomorrow is a better day. We may see a this moving to the close may be the smoke signal for a little gap down tomorrow. Maybe a full reversal of today. 360 flush. Still in the cards. So the rest of the week I think is going to be epic. Because even if we don't flush 360, we're gonna get a good pullback to buy in from. So, all right, guys. I don't know what time I'll wake up tomorrow, but I'll see you tomorrow. Peace.